Good morning, everybody. How are we all doing today? $390 SPY August 19th, still okay. Let's see why not. None of my plans have really changed because Google and Microsoft decided to miss earnings. Matthew Flores became a billionaire at 9 a.m. Welcome back, Matthew. Thank you so much, man.
Happy birthday, girl.
Thank you, Carl.
Yeah. Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold it afloat. If you are what you eat, that makes gherkin to go. Hoping that you read the DD, cause when the
Durable goods better than expected. Inventory is worse than expected. Alright. It's probably not going to do a lot then. Dow might do a little better. Thoughts on all the ups after the market across the after market across the after out in the after hours. What? Remember yesterday when I said I was looking for an entry on SPY puts? Looks like I got my wish. Yeah. I mean, the surge in pricing on Google and Microsoft was completely unfounded. Not only did they miss EPS, right? But like they both lowered forward guidance. So, yeah, I mean, kind of bullshit. Could be like a little bit of a pump in order to recapture some of those like 400 positions. I still don't think we're gonna chop into like that upper part of that channel on the SPY up by like 398. I think that's still a bit out of reach. But 395 wasn't really outside of expectations, so I'm not too shocked. Home sales 10 a.m., but big show later. Yeah, those are pending home sales for new homes, which probably suck even more than the actual new home sales that have closed from yesterday. Darth Dan trying to start another stream card artist strike in the Louvre again. I'll just go ban him real quick. Hold on. There we go. You're a rat, pigeon teeth from us. How did you sleep, senpai? Not bad. Sorry, I need to go grab coffee. Dude, my fucking espresso machine was empty this morning, so the boiler didn't turn on. I just filled it up, but yeah, I still haven't had coffee either. And the goddamn thing takes like 45 minutes to heat up. Baba puts again, or does Tech Pump make it less attractive? No. I'll probably buy puts after open again. I mean, yesterday the 103 puts were just free money, right? Yeah, it's opening at 102. I don't know if it goes above 103, maybe. Otherwise, I'll just hold on to the ones I have. Ding ding. Wonder how this arbitrage is going to play out. We have slightly negative arbitrage overnight. Um which usually means we see some upside, but not necessarily. We don't have a lot of FTDs today, so be aware of that. Something else I noted in the daily today is that there's a gamma imbalance or a hedging imbalance that Haley picked up on GameStop that could be kind of large. So if you get a good exit opportunity on some of your sold covered calls today, you may want to consider pulling back a little, or at least hedging in some way. Just because like the imbalance is so late in the week that it could, put you at risk of like that last. Play me the pickle song for my subscription. All right.
Pickle, pickle, pickle.
How's Touch Tipper V2 coming along? V like it's more than 2, but better. Sherwin got murdered. Oh no. My leaps. I'll check it out later. Are you concerned about your Tesla puts going back up to 790 by the start of the trading day? I mean, they're still $20 in the money, so no, not really. Like I said, earnings makes no sense. Yeah, I mean that's why I don't play them, right? Because they're kind of just, and like right now it's even riskier, especially on the mega caps. Like we talked about this yesterday, because they're perceived as being so undervalued. Even on a miss, they can still run, right? So like even if you've done your research and your due diligence and everything's pointing to like a negative previous quarter and negative forward guidance, the stock could still run a little bit, right? And then you're just holding through fucking IV crush, which happens for mostly arbitrary reasons. Would a higher rate increase benefit overall the market? Bulls would capitulate, big sell off, no sellers would remain, new market leaders would emerge and pull back up the rest. No? I mean, probably after the market crashes. If they go too high, it will crash the market. Remember, every point is, debt that has to be rebalanced. Trillions. Zom to 130. Yeah. You're still $40 off, Lawrence. Ooh. Free entry? Huh. These are up like 68%. You're down 16%. choppy day, it looks like. I deserve that. No problem, man. Think we chop until the Fed meeting? It's possible. Market opens like kind of volatile, which is interesting. Still a lot of positions at 400 though. I wonder how close they need to get to reposition them. What was up with the pump yesterday and after hours? Microsoft ran like hard 2 hours after earnings. Yeah, not a lot of it makes sense. Futures pumped too last night. Are you holding on to your SPY puts? Yeah. I mean, they're for August, right? Pull back half of 33 cc's due to the imbalance. Yeah, I'm going to pull back some. You think it's possible we go back under 25 and bounce back? Maybe, but I mean, we bounced pretty solidly off that low trend. If you look at the TA from the daily. Have you ever gone fishing? Yes. Did I want to? Did you see Jake Freeman posted in the BBY subreddit? Yeah, it's very odd. I mean, I think they're trying to secure their unsecured debt so they don't get fucked in the event of a bankruptcy. But I also think they're trying to get like shareholder support for like a proxy war. I'm not really sure why they're reaching out on fucking Reddit. Wasn't the late Microsoft pump from their meeting when they said shockingly robust cloud? That must be what did it. There may only be one of me, but I will no longer sit idle by. The stream has been plagued by the dance for far too long, and their time has come to an end. Rise up, pigeons, and join me in taking back the stream. 510 or 127.50 for life. Yes. Thank you, Pigeon Teeth from OS. I appreciate that. Thoughts on Linixis's DD regarding a run August 2nd. I think he's a bit early for the ETF FTDs. I imagine Girk is the guy in that meme with the party hat standing in the corner while everyone is dancing, and the tagline is they have no idea that ETF rebalance and OPEC starts tomorrow. That sounds like a lovely meme, Thunder Fury. A Freeman, same like intern, maybe same like trust fund child. They dare attempt to usurp the Dans? I don't know what's going on. I don't even know how many pigeons there are. I mean, pigeon whales aren't pigeons. They're part pigeon. Your spy puts are for August 19th. My spy puts are for August 1st. We're not the same. There is but one pigeon. I don't like my odds in this fight. It's it's a weird stance to take. I'm not gonna lie. I I wish you the best. Are we going down on green candles? No? We're just going down. Annoying. 396.14. Maybe. 397 again? That seems a bit high. I'll just buy more puts, I guess. Tesla failed. Oof. Man, where is all this fucking volatility coming from? Nothing's happened. Didn't like Putin shut off the flow of natural gas to Europe today? Like, how the fuck are things running? Did you buy back some of your CCs? I mean, not yet, because they're getting driven massively into the money. Figure I'll wait for a bottom before buying them back, which it doesn't look like we've found yet. We found the negative beta. Yeah, look at us, dork. You know what was interesting is like arbitrage was really negative this morning. But like the indicator was like showing that they were grabbing liquidity before market open again. So I guess that outweighs the effect of arbitrage, which is kind of nuts, right? My fellow Dans, it's been eons since our last battle. We've won against Crawfords, Natties, Shills, and others too. Insignificant to... What the fuck is this war raging on the Discord? I'm gonna time everyone out. Insignificant to remember. It's time to remember who we are. It's time to fight. My fellow Dans, like your life depends on it. Oh, Jesus Christ. Listen, man, I'm trying to get out of cover calls. I don't need you guys reeing at the moon, okay? I missed 2 Ko-Fis. Yeah, they were all like on top of each other. I'm trying to get to him now. Who wants to be a pigeon? Dans are way better. Our homes offer the finest quality dumpster juice-based refreshments. Fair. Pigeons are just flying rats. Do you think the 75 BPS has already been priced in? After the minutes, the market rallies hard because lack of uncertainty. Well, first of all, these aren't minutes. This is the rate projection. It's a bit different. The last rate projection did not end up bullish. So the minutes usually get announced and it clears up uncertainty and the like it'll rally and then the realization of the rate comes in and it kind of like the next day it drops off. The last one of these in May was super fucking volatile. If I remember correctly, it went up like $8 and then like down 12 and then ended up staying down and then dropping further into the like subsequent days. So I think what's baked in right now is exactly what was announced at the Fed minutes, which is like 75 with a forward rate of 50, right? 75 to 1 with a forward rate of 50. But if they go 75-75, or 175, that's gonna be fucking intense. What's up, Garrett? HD is dying. I did a TA. Congratulations, JFresh. I'm so proud of you. All right, there we go. Now I can close some of these fucking cover calls. Ah, you bitch. You have to bounce back so hard. Relax. You know what? Fuck you. I'll just wait. $3.95. Trading view. SPY. What the fuck? Okay, there's resistance right there. The 395.74 is pretty important. Hmm. Cool. I don't like this. Volume. Last time I thought it would be 50 and the Fed went 75. Yeah, and then CPI still came in higher than expected. So here's a little monetary. Yeah, someone is pumping it. It's weird. Maybe JPM repositioning. So little lesson in like what the Fed is trying to do with their monetary policy right now. I figure I'll outline it. So say these are all the causes of inflation, right? You got food and rentals and all this shit, right? The oil, energy, used cars, new cars. So these are all the causes of inflation. As inflation climbs, these bubbles get bigger, right? So some are small, some are larger. This is the explain like I'm five monetary policy effect of a soft landing. Right? Now, monetary policy can only affect some of these, right? So say, you know, of the elements of core inflation, these are affected by monetary policy. So the goal is to keep these inflation rates as suppressed as feasibly possible through monetary policy because they have no control over these, right? And so they want to like what they have to do is they have to overcompensate and bring these bubbles down as small as they can to offset the growth in these. Yeah, good. And so when inflation rises across all the sectors, they need to get out in front of the growth in these unaffected areas by deflating these affected areas even more. So it's in their interest to target rates more aggressively. Needs more circles, I know. Do the bubbles that they can have effect on influence the inflation on the other bubbles? A little bit. But generally, unless they pop some of those bubbles, not necessarily. Can you explain it again, but with purple circles? No, we don't use those here. Is it time to close my profitable puts on GME? I closed mine already. The ones I had from last Friday. Okay, so 35.70. And that's kind of in line with our expectations if we can see a rejection here. You piece of shit. There it goes. Hey, look at that. So yeah, let's go down here to the 1 hour. So this would be roughly the peak of the other shoulder. There's a little range, 396.15 maybe. But this is where we can expect to see another rejection. Remember that 393.58 level is still very important to confirm a continued breakdown. It's not uncommon to have a relief rally though, which may be all we're really seeing. I would say that at most we'll see another retest of 398 and maybe repositioning of like 400 or 4,000 positions on the SPX. Someone's definitely trying to get it up there. How do cover call premiums affect taxes? If I sell a CC and get $100 and I buy it back at 50, am I taxed on the 100? No. Because your total profit from the position would just be 50. What would be a good target for selling Microsoft CCs while Ivy is pumped? Ivy didn't crush this morning? Above 270 doesn't seem too bad. I don't know how far out you're selling them though. Yeah, 270 is about 0.2, 0.23. So anything above that's probably not too bad. Amazon still rallying? Yes. Okay, cool. I'll get a chance to re-enter that to the downside as well. $193 likes, same like Biden approval rating. Go 400 likes already. I'm sure we'll get there, man. I'm not worried about it. Any thoughts on Google just now? Mm, nice bounce, but lower high. Lacking volume. So you got declining volume into this rally. Doesn't look bullish. GME double bottom. 3160. Interesting. Can you explain like I'm two where babies come from? Mm, no. What's the difference between SPX and SPY? One's like the CBOE index, and the SPY's an ETF that tracks it. Someone is pumping Apple hard. Looks like somebody is pumping a lot of things pretty hard. Is it easier or harder for you to analyze GME post split, or do you need more sample size? More sample size is always better, obviously. I don't think it's any easier or harder. I mean, nothing really changes. Are we on the run cycle at the moment? No, we should be moving down. Um, Selling CSPs is almost always better than buying shares outright, unless you really want to own more shares. But, it could take like a year to eliminate your cost basis on them. Conservatively, obviously, OPEX runs and things like that, like opportunities to take advantage of higher premiums present themselves, you can and you're able to take advantage of them, then you can reduce that time drastically. But I mean, selling CCs when we're flipped to, or CSPs when we're flipped on the, like when we have the positive market maker hedge like we still do, um below gamma neutral is probably like where you want to target. I'd be careful with that though, because there's definitely a concerted effort to push the price of GME down right now. I think it's perfectly reasonable to see us test like the high 30s, maybe even like back to the $29 range, possibly briefly, but I don't think it would be out of the question. Holding off on DCAing SPY puts. No. I have orders in place. If it continues to rise, I'll buy more. It does look like it's kind of failing a bit here. I might bump up like my 385 order just to average that down a little bit. Today's show this morning was all about defining recession the right way. And does a recession title even matter to the common person? That's awesome. I'm really glad I don't watch daytime TV. Well, Barclays has to buy back that like $20 billion in shit that they accidentally sold. They don't want GME to go below 30 because FOMO buying on the lower side. I don't know if they're that worried about 30. Maybe. What's the SPY bullishness? It's a good question. Ty the Tasmanian Tiger, welcome to Dillionaire. Thank you so much, man. What's a good percentage down to average your puts at? If you're going to stay in the position, probably like 30%. So you can have it. That's about what I was at just now on these. Roughly. My other ones are a little bit better priced, but not much. I think I got these down to negative 14. These are at negative 12.37. So they filled at different times. 10 a.m. coming fast. Oh, 10 a.m.'s already here. You saw the daily DD comment from Yelia. I was looking at her in August to see if GME popped up this week. Well, it could if the gamma imbalance is resolved. It could cause like a small run, which may be a better opportunity to enter covered calls. Ooh, SPY's doing another big rally for no reason. Massive buys off Arca. Hmm. 395.83. What did I say? 396.15? $396.27. 396.27. That looks very bullish. Hmm. This be Fed temporary QE before reality kicks in? No. They're in the process of doing QT. Has to be repositioning. Nothing but calls sold and puts bought across 15 assets. I checked on Sift Search and Market Chameleon. Something stinks. I think there's a lot of I think yesterday's downside move came a little stronger than expected. And I think there's still a lot of positions trapped up at like 400. And it looks like someone's trying to pump back and grab them almost. Especially given so much of this move was pre-market and after hours. I hope no one here got burnt on the TBLT pump and dump from last week. Remember hearing a lot of chatter about it. I have no idea. I didn't buy it. I was talking to Stefan about it, but they were doing like a shitload of share dilution, so it seemed like kind of risky. But what's this? Cool. Okay. Any advice on finding? Thank you, JMac, by the way. Any advice on finding specific advice on finding resistance levels that you isn't so freely available? What? Yeah, I pulled back my covered calls. Just because I think there may be an opportunity to sell them at a better price. But I mean, they were way up already. So if the SPY tanks August 5th or later for the most profitable play, for like playing the downside on the SPY, I mean that the worst part of the downside might be just realized between like the end of this week and next Monday, right? What's considered active shorting is we're inverse the market. Maybe this morning. Now, maybe not so much. I think we're tracking a little better. So Jimmy, around 50 mid next year in probability. I mean, that'll depend on what changes with the business. 50 would be a pre-split price of 200 average per share. That would require like significant changes in their current valuation. Anyone else loading up on Tesla puts? I have some already. I might start to buy more. Very interesting. Also completely fucking unreasonable. Shopify slashed its workforce. PayPal. Are you sussing or bussing for GME August OPEX? I mean, right now it doesn't look like there's a shitload of obligations built up, and at least not in XRT. But there's a lot of time, so we'll see how that looks in a couple weeks. It's considered active shorting as we inverse the market. High 30s for GME. Did you mean high 20? Yeah, I meant high 20s. Sorry. Dixie's still pumping. Yeah, I know. Like VIX is kind of spicy. Dixie's up. I don't know. It's weird. Fucking winter wheat went up 3.8% overnight. Ooh. Futures are still pumping pretty hard. Hmm. What do you think happened to all the June obligations? I mean, it's possible they don't need to clear them until the quarter end. I still don't know, though. They have ways of extending it, but the quarterly audits should prevent it, right? Maybe they just covered it. Maybe the price action we saw was sufficient. It didn't seem like it was, and considering most of it was options, I highly doubt it. $12 million, 377, 916 SPY put just printed. I know it's not huge, but downside bets still coming in. $12 million order of 377, 916 SPY put. Okay. I'd expect downside bets to come in on this pump because, yeah. Someone knows something that we don't, i.e. rate leak, or is this just JPM or someone pumping their bags before they dump everything later? That's kind of what it feels like given the volatility of it, right? It feels like someone's buying a lot in big fucking blocks, trying to drive price up, and they're doing it on multiple like big assets. Like you're seeing a ton of volatility in like Apple, Meta, Amazon, Tesla, like all the big S&P stocks. So I mean, it kind of feels that way, right? Thoughts on Sherwin Leaps at this price? I still don't want to look at it. Oh, that's not so bad. Let's just like back to my entry. Yeah. This is a nice price. I'd want to know what happened there. Why did their earnings miss so fucking hard? Estimated earnings missed estimated earnings by 13.31%, reporting an EPS of 241 versus an estimate of 278. Revenue was up 492 million from the same period last year. Last quarter, the company beat EPS by 6 cents, which was followed by a 2.95% increase in the share price the next day. Right. Investors. Insurance management provided guidance for the year 2022, expecting earnings per share between 850 and 880. All right. Doesn't seem so bad. Maybe, I mean, some of this may just be a sell-off. I wouldn't be surprised if it recovers quickly. So yeah, not a terrible entry. What the fuck is Microsoft up 5%? Hmm. It's so weird. Hey, Baba's going down. Oh, did I get stopped out? Sorry. This could quite literally be the irrationality before a recession, possible crash. Yeah, it could be. Like one last bear rally. I mean, at least I have a little time. Thoughts on August 19th, Tesla 800p. Not a terrible bet. I'd wait and see how far this rally goes. I'm gonna straddle the upside here. Especially if I can get a little dip. What's on shop? Oh, you might have missed some of the downside on that already. The Credit Suisse, it's on at 2 a.m. talking about booted CEO or something. Had bullish dreams. GDP estimate has now been raised to positive number because of good durable goods, trade deficit, and inventory numbers. Inventory numbers were fucking garbage. And durable goods weren't great. Like, it was a small bump, but is Tesla dead? No, not dead. Far from dead. Overvalued extremely. Actually, if shop goes up a bit more, I would buy puts. Yeah, I might wait a little bit. I had some the other day, but I closed them. No, I'll probably average them down. I'm not planning on exiting the position, Yaga. Straddle. Fuck it. Alright. Well, at least Caterpillar's decided not to rally with the rest of the market. Visa had a nice bump. Spy's really losing steam here. That's awesome. IWM still just holding 180. Meta moving up. So a lot of this is like NASDAQ, right? Mostly. And NASDAQ up 200 points. This is fucking ridiculous. Short the shit out of this. GameStop moving back up a little bit. See if it holds the support here. Would you get Tesla puts now? I'm getting torched at the stake. What? Oh, I bought a straddle. So I bought calls to the upside, and then we'll see how far this run rallies, and then I'll average down puts. I'll probably get burned on the long side before I get burned on the short side, but 295.98. So just tapping 396. That's unreasonably high again, too. I love it when the market gets wildly irrational. I'm still trying to learn the conviction versus risk management pendulum. If you can afford to have conviction, that's great. If you can't, risk management's still more important. Rip to the guy on Wall Street Bets who bought 60K in SPY puts. Were they like 0 DTEs? Yeah, PayPal's got some weird shit going on with like some activist investor, but no one knows how much they bought. It's up like 8% today. Does anyone truly believe that the current administration will take the recession hit? Seems obvious they're going to do anything they can to dodge that bad look. Also, big banks know this in advance. Free and fair markets, eh? I mean, sure, but it doesn't really matter, right? The world economy is still going to view it as a recession. If they want to say it is or not, I mean, it really doesn't have anything to do with it. Like you, you can't do like, oh, that's not happening. Apple volume falling off hard. The downside on futures is going to be violent. Yeah, it looks like it. Where's Segan? I haven't seen him for like a couple of days. He must be trading the shit out of this. He likes trading minis. Kraft Heinz is down 8%. Thought that was a good hold in a recession. Wait. We're not in the recession yet. Was the snazzy font VWAP hat more expensive than the standard font? No. Do you think actively day trading cover calls is a good way to learn to trade based on TA that has lower risk than trading, but more reward than wheeling? I mean, the reward's not higher than wheeling, but it is lower risk than like trading long calls and long puts. Time for Jimmy puts. There's not a lot of downside room, I don't think, left. I mean, I closed mine already. Both hats were in fact free. Holy fuck, I just spotted that gap. Buy SPY. There's a big one. Not so much here, but on SPX. If you go look at SPX, there's a huge fucking gap. I'll show you guys. If you got here to like the so yeah, it just gapped up massively. And that's likely to fill. Best of all, it gapped up on nothing, right? That's ridiculous. Yeah, it's kind of fucking stupid. I kind of want a little more rally now that I have a straddle. It's like $5. Stop getting fucking rejected at 810. God bless capitalism, right? Baits bulls into going long, then drops. Oh yeah, I'm definitely sauce on this, boss. What's up, Sploosh? How you doing, man? AP, somehow I still have a message. Big love all. Spy pump clearing straddle before the J-Pow death punch. Maybe. It used to be a great cooking channel, but we started stopping people's games and saluting the SS like my old sergeant said not to. One of two. Are $35 CCs at risk right now? I don't know. I just pulled back my CCs. Mostly because of that hedging imbalance. If that gets covered and we get like a nice spike to like 35 or something, I could make a pretty fat profit off of them. That's the biggest cap I've ever seen. Aren't you scared J-Pal will unleash the bulls? Not really. If he does, I just cut my puts, right? I'm not down very much on them. Some of them, I'm still up on my Tesla 810 puts. Because I bought them when it was trading at like 820. Tesla at its top. It's definitely having a hard time breaking 810. Do you have calls on the SPY? No, just puts. No straddle on the SPY. I played the long side on minis last night, which was okay. I made like 9%. We had a rally like any of the other rate announcement days. I mean, the minute days are a bit different than the forward rate like announcements. So the minutes we usually like kind of rally as certainty comes in and then drop off as the new like rate pricing is realized. But these can be a little more volatile than the minutes, because the minutes are from like the month before, right? And this is a forward, like this is like their forward interest rate decision. So it's a little more important. If you remember back in May, like I straddled the last one of these announcements and I made like 20 grand because it went up like $10 and down like 13 because the entire fucking market straddles it. You're gonna stream the announcements? I mean, the press conference is like 30 minutes after the decision's released. So I'll probably pull up the decision when it comes out. I'm trying to fill that tiny bit of upside gap left on SPX at 4017. I think so. I think they're trying to get out of their like 400 and 4,000 positions on the SPY and SPX. Collars are a little riskier because they cap your upside, right? So like the price of the written call is like where profitability stops. They're not terrible, but I'm not a big fan of them. Hmm. SPX failed the test too. The SPX hit that range though. The SPY did not. SPX topped out at 39.70. Because they hedge it, right? Apple broke the EMA 30. Cool. Apple has earnings tonight, right? You take a look at you again. For the last 3 months or so, it's been channel locked at like 30, 40, moves 10 to 15% over the course of a few days. Thoughts appreciated. Didn't we talk about this yesterday, Harry? It's consolidating, and it doesn't look like it's consolidating for a move to the upside. So I think it's gonna like move down further in this channel. You see how the highs are getting lower? Lows are also getting lower. This next low on this could be quite low, maybe back to 29. Like the range isn't terrible, but uh, you're playing a downtrending, like you're essentially playing the downtrend. So you really want to wait for that lower low before making an entry. Stops are 20%. Thoughts if that's enough breathing room? Probably okay, yeah. For the 2 p.m. volatility, it might not be, but it's hard to say how much volatility we're going to see. Apple earnings are Friday? Whose earnings are tonight? There's another big one tonight, right? Today's what? Amazon. No, today's Amazon and Apple, right? No. Aftermarket, pre-market. Today's Meta, Shopify, Boeing. Today's not. Qualcomm. Qualcomm and Meta. Tomorrow's Apple and Amazon. Yeah, they're not Friday, dude. They're Thursday. All right, so GameStop Twitter told me to buckle up, and now I'm buckled, and nothing's happening. Good time to pick up GME long-dated volatility plays with the current IV so low. Yeah, IV's not too terrible at the money right now. A little elevated since this morning, but if you go out, it's like at 92%. What's the IV on these right now? 109. Yeah, it's not terrible. You might get it a little cheaper still. Yeah, Sherwin missed a little bit on their earnings. Still Jimmy CC's on this run, or wait? I mean, this isn't really a very big run. Missed where you said if you're holding your CCs through this economic news. No, I closed my GameStop covered calls until the gamma imbalance is corrected, or the hedging imbalance is corrected. Because I think there's a potential that we run up maybe like 35 before coming back down again. Like just a small bump. Call ramp on the VXX is nuts. Yeah, long volatility positions are pretty popular right now. Ooh, it's a very attractive entry. August 3rd, July 27th. That's today though. So VIX expiration. Interesting. 24. How are we feeling about the Tesla and SPY right now? I feel like this can't be very long-lived. If we get a 0.5 rate, do you think the SPY would rally all the way to 4,000? So the Fed pulls back on addressing inflation at all? We'd move a lot higher than 4,000 if that was the case. This isn't the intraday high. We opened higher than this. Intraday high is 33.21. Check DM. Ooh. Wait, Dork, so the tips are going to touch again? This is very exciting. Oh, they're still kind of far away from each other, though. What if they don't? What if we're seeing expansion? It'd almost be implied, right? From July. Curious. I sold some $4 November 18 puts on BBY for $1.10. Do you think we're seeing the bottom on Bobby? No. It's been really stable at like between like 4 and 5. But that doesn't mean it's the bottom. Check this shit out. Ooh. That's fun. Also kind of bearish. Sorry, I missed someone's Ko-Fi. A short-lived war, but I must capitulate. Due to the lack of pigeon support, the lifestyle of the dance has been roped upon me. They may not accept me, but I'll gladly accept them for a small fee behind the dumpster. Sad re. Oh, look at you, Pigeon Teeth. You've become a Dan? How wildly disappointing. Will Nixus right again? It doesn't look like it. When was he right before? Can someone remind me? Can you talk us through how to play the FOMC straddle How far out of the money, DTE, do you set stop limits for profit taking? Time of selling, etc. Thank you. You buy at the money calls and puts with 0 days to expiration, and you try to sell them while they're profitable. That's it. It's like rolling the dice. You're still holding your docu puts? No, I closed those yesterday. Why did it drop more? No, okay. When selling CSVs, do you have to hold cash? I mean, if you have margin, you don't. Since nobody wants my AMCCCs, I played $17 PS a few weeks ago that expire Friday, up 230%. Do you see more downside into next week for AMC? I have no idea. Why would I care? I hope so. Sure. I could go down to like could probably fall back to like 13. I don't think that's out of the question. Huh. Leaving a lot of gaps open to the downside. First week's November and Feb. Past 2 months, kinds whiff. June 7th? June 7th was just ETF FTDs. Also, I don't think he talked about June 7th. It was like June. Was it? No, it was like May. Was it the T+2 date from the May OPEX? I think was the one that everyone got all bullish on. So it was like May 31st, right? That was the one. And then it didn't run up nearly as much, but it did run. Sega trying to do things. I mean, Sega's just doing things. Oh, look, it's the thing. Is this it? Is this the gamma imbalance? VIX is moving up. What's the SPY doing? Dying? It's definitely not moving up like that. It's real. Jimmy doing a thing. I know. How much thing is it going to do, though? That's the question. Ooh, spicy. You do quite a bit of thing. Is this mass? Cute. I already closed my CCs. By August 5th, 3650 cc's, I'm in danger. Buy them back and not really. If you're scared. Alexis has been right. He stood in reception wearing a wig and asked us to call him Marge, remember? You can't challenge a person's gender preferences, mate. So he's right no matter what. BBY AMC as well as this time. At this time, interesting. My temp shares and TD finally resolved. Oh, nice. Resolving hedge imbalance? Yeah, I think so. It's interesting as I think it's gonna keep going up. I don't think it's anywhere near done. This is very curious. Could still move quite a bit. Where's the peak? I don't know. They're trying to, they're gonna try to suppress the price movement, right? If they can. But I still think that there's some more to go. Maybe quite a bit more to go. Is that T plus 2? This is the 25th, 22nd. So this is the last T plus 2, right? So these are packed in dark pool dumps. Interesting. I mean, technically it's T2. Still, dork. The split occurred Friday pre-market, right? That's tough. Yeah, I mean, trades Friday. Well, today's the last day to clear them. The orders would have to already be placed the market open. That wasn't JPM, it was Barclays, and almost none of it was GME. It was basically all like IWM and VXX, uh, RTY. Shit. Hold on. Are you gonna re-enter Amazon Docu and Baba after the Fed? I might, yeah. Not Docu, but maybe Amazon. What's happening? Is this MOASS? No, but it's a thing. Interesting. You know what? Fuck this. Buy some options, weeklies. 34. I think T2 and T5 are the two due dates for creation redemption. True to my university roots. I didn't actually read the paper Turd provided me with, but I act like I did. It's T3 and T5. And T5 is really T plus 2 plus 3. This is for APs. How can you tell when there's a gamma imbalance in GME? Imbalance, not gamma imbalance. Imbalance, based on the presumed hedging. Kind of like Knave Gex. Different, but kind of like that. I just set it for cheaper. Why would you ever buy anything at the ask? Good time to re-enter IWM puts? Probably not terrible. Just T2, T3, T5, T6. T6 is actually like a misnomer. It's just easier to understand. It's T5, which can be resolved on the 6th trading day, right? T2 and T3 are real things. T4 is T plus 2 plus 2, which is a market maker thing. This is usually never taken advantage of. Are most of your shares in margin accounts or portions in either? Most of my shares are in cash accounts. GameStop doesn't really net you any margins, so there's kind of no point. What if RC's buy-in actions of BBY were to prove what happened with Jamie wasn't his buy-in and retail? It was more about cycles and excessive short positions. Well, if that was the case, then he didn't prove it, right? Well, Nixon says he has the DTCC manuals. They're available to everyone. You want the settlement manual, uh, custody PBS user guide, rules and procedural manual, bylaws, rules and procedures, settlement service guide. They have a DTCC reference guide. And which one do you want? Settlement one? Yeah. What to expect when you're expecting guide. I can't believe I haven't had coffee yet. How do market makers determine a fair price when making markets? What's stopping them from keeping a price in a channel forever and profiting from it? They don't really determine fair price, right? They're supposed to be neutral. Nothing stops them from keeping the price in a channel and profiting from it, though. $80 pages? I can't read, though. What's up, Sally Snipes? Thoughts on Shop in general? I don't think they're doing well. They just laid off 10% of their workforce and they have earnings tonight. They also own a big chunk of, whatchamacallit? A firm, which is massively down. Hey, it's doing it. It's gonna leg up that last like 396 test. Completely unreasonable markets. It's the best. If it comes out hawkish, are you gonna sell in the money GME CCs or continue to see how the imbalance plays out? I'll probably continue to see how the imbalance plays out. CAD getting another upside test. Ooh, nice. Really having a hard time breaking this level and holding it. I do like the stability though. Ew. Move up. This is why you buy puts in August and not weeklies. Yeah. Well, I mean, you could have bought weeklies, right? But you want to close them when you're profitable. You don't want to fucking wait. You don't wait a weekly out. When you have a weekly, you're like, oh, I made money, and you fucking take your money. Why isn't there active fund pressure on GME due to the rising market? Internalization. Today's volatility, can you see this SPY drop as fast as it's rising? Maybe, but it may not drop until like overnight, right? Any thoughts on Dave? Vol is wild today. Yeah, volatility is kind of crazy. Hold on one second. I'm trying to do something here. Yeah, this is interesting. I wonder if we're gonna have more like weird fucking high volume dark pool prints. Please explain why BBBY is a total piece of shit. I mean, uh well, because it was horribly mismanaged and they racked up shitloads of debt and decided to spend all of their available cash on buying back shares in order for the C-suite to bail profitably before the company went under. I know what internalization is, but can you explain it for everyone else? The DMM controls the order flow to the lit exchange, and so they can satisfy orders with inventory instead of satisfying them on the lit exchange, and then take that order flow and use it later to satisfy other orders. Please explain why SPY is a total piece of shit. Because it's rocketing for literally no fucking reason. Besides that, large investment banks probably want to reposition their shitty puts and calls that are at 400. Because they're afraid that the Fed's going to fuck them. And if you zoom out, it's really not that frightening. It's kind of just like another shoulder. It's still well within range, so. Did Bobby have enough money on hand to cover its debt prior to the share buyback? No, but they could have covered a very large portion of their debt. Can you explain, like, on 5, internalization? So you have, like, a little guy in the market, and he's coming in, and he's like, I've got money, I'm gonna buy some shares. Right? He's waving his dollar bills around, and then you have, like, Kenny here, right? Kenny's like, I'll go get you shares. And then Kenny takes his money and gives him some fake shares. And then Kenny runs around and he takes those orders and he drops them wherever he wants at the best possible prices he can get to all the little vendors. Or he keeps them, and then when that guy comes back and he's like, hey, I want to sell these shares, then Kenny can just sell those shares back to him, right? That Kenny guy. He's like, here's your shares back. That was actually appropriate for a 5-year-old. Well done. Every time you explain internalizing, I want to open a hedge fund, become a market maker, and just print tendies, right? Internalization is part of PFOF. Sort of. Well, Jimmy started to do something. Relax. If they placed all the orders at market open for T+2, and they're going to resolve them today on Wednesday, then we'll probably see more dark pool dumps throughout the day, similar to the one we just saw. I like that fucking upside volatility, though. I was worried that might be gone. But we went up. 2.46% in 4 minutes. Pretty good. Market making should be a non-profit business. Probably. Or fully automated. It's almost like the government should make all the markets. But that'd be weird, right? That's like socialism. Steven Seagal. How's liquidity been? Still pretty illiquid. People are selling, but not a lot. I think like 2% rip on news that GameStop, they're open on Wednesday. Yeah. Couldn't the jump in GMU just be 2x spy beta? Sure. Like they dumped internalized orders from earlier today. That's possible. Is there a cycle coming up? Possibly. Coffee time. Yeah, I still haven't made my coffee. Thank you, Mike. I appreciate that. I'll get to it in a second. I kind of want to see how this plays out first. Oh, fuck you, you piece of shit. Hey, look at that. Was that the high? Yeah, just about. I mean, it crossed it a little bit, but it was like kind of spot on. The previous high. Yeah. I have any other? Well, there's some back there, not a lot. I don't know how strong this will be. You know, it could just move up to like 397. How close did it get? I can't tell on fucking trading view. Hold on. 30 cents off. We might get one more higher high. It's 11 o'clock. June OPEC's coming up, right? We'll see. If we're back on F, man, and they're done compressing all their obligations into weird covering periods, then it looks good. But right now, I mean, like, I really like the put interest. I don't like the XRT put interest, though. XRT put interest is still really low. I mean, it really looks like after June, when they went back on threshold, they just kind of stopped using XRT. At least not excessively. So we'll want to see interest in that pick back up. Or they found another ETF to short us with, which could be a nightmare to find. Still in the Baba play or dead? I got stopped out when it dropped earlier. If it moves back above like 102, I might re-enter. But I got stopped out here. I had a trailing stop. So if it comes back up to like 102, I might re-enter to the downside. It's getting riskier though as it finds more and more support at this level. Like the longer this drags on. This was like really good the first day, like on Monday. It was awesome if you got in at market open. Um Tuesday was really good if you targeted like 103. But my 98s didn't print, and then I'm actually not even sure if my 98s printed today. They might have gone in the money. I know I averaged them down a little bit yesterday. Barely. But the 103s and 100s did really well. So yeah, if this rallies up, there's probably another opportunity to get in the short side, but given that we're so close to the end of the week, you may want a little theta just to keep the contract from burning up. So you may, like, at this point in the week, you may want to look at like August 5th puts. If you're gonna trade Baba though, you've really got to stay fucking on top of it. You can't miss your exits because it can bounce back really, really fast. A condor doesn't like the climbing spy. Yeah, I can see that. Could all the Philly action partially be why XRT has less puts or completely different? Well, I mean, we know that the liquidity in XRT tightened up to a point where they had to start turning to borrowing actual GME shares, right? With the split, they'll have more liquidity in GME shares. They may not need to borrow so heavily from XRT. Yep. Oh, yeah. King Zach. Exactly. But there's still a big fat fucking pile of obligations due on XRT that haven't been resolved. And then if, you know, if there is a pro rata, what's the word I want to use here? If they have to rebalance their NAV due to pro rata agreements to make the fund whole again before its next rebalance, they're gonna have to go out to the market and buy back anything over lent, right? In order to pass that next audit. So even if they were to walk away entirely, they would still have to cover the remainder, right? Not likely meditation. From your experience, how many weeks out of the year do you think you can sell GME CCs and CSPs? Like 90, 50? Reliably? Without risking assignment, I would say there's about 16 weeks out of the year where it's fairly high risk. Do you ever lend shares? No. Well, I have 1,000 GME shares that are in a margin account, so those are probably lent. I mean, not that I've turned on share lending, but I think it's just automatic because it's in a margin account. Didn't GME become the most heavily weighted company in XRT because of all the liquidity they needed? Would it stand to reason that something like this could be happening in another ETF? Can you tell if they moved ETFs? Thank you. Possibly, yeah, if you see GME weight going up significantly in an ETF. The problem is the ETF needs to have not only a lot of liquidity itself, which sorry, King Zach, 1 second, which XRT has, right? And IWM has. They're very liquid and they're very like they're some of the top 3, 4 most popularly traded ETFs, like IWM, XRT, SPY. The rest of the ETFs don't really have a lot of options and stuff. So, if they have found a way to even diffuse it across the other ETFs, they do need those options in order to mark long. Otherwise, they can't get that really big extension of covering. What do you think about VTV large put OI now? We'll look into it. When would that balance be due? I'm not sure. The next futures expiration is September. I think it's September 16th. Which would mean that if they wrote forward contracts to cover the imbalance, this would be the next like big date. But they may have just written the forward to August, right? Because it was back in June. Remember, our cycle used to be on F-Man. And we got March, we just didn't get Feb, right? So this year so far, we've had MM. And that makes it, kind of hard to predict. And then, like, June, July, we had, fucking just weird price improvement, but for no apparent reason, with a distinct lack of short selling. So we'll see if this normalizes again, and now we get an August cycle. And that's why, the plan since May has kind of just been get exposure to all of them. Right? You just open fucking calls before expiration, and if they don't print, you fucking sell them. And for June and July, that wasn't too bad. It wasn't great, but it wasn't too bad. I mean, the stocks still went up 20 and 40%, respectively. If they know the market's going to crash, could they have backroom pre-boof agreements with XRT to make them whole? Am I overthinking it? Sort of. I mean, that's kind of what the forward does, right? Is it's kind of like a non-transparent way for them to make the ETF whole temporarily until the expiration of the forward contract. So it's not too tinfoily, but that's like kind of what we're trying to describe. Spy's still shitting the bed. GME's actually still looking pretty good. When are gaps relevant? When the market maker decides they are. Gaps can go unfilled for years. Sometimes they never fill. Decades. And it's just they're really not. I would say the most likely gap fills are very big ones on longer time frames, or very small ones on very short time frames that are very near the current price action. Are you looking to sell GME CCs today? I bought them back today. Risk tolerance on your 34 weeklies? Approaching it. I'll probably wait till the mid-afternoon. They're kind of a gamble anyway, so 20%'s not really relevant to me right now. The 20% risk is like a thing when you're first starting out. And then as you grow your account and you get more experience, you can take on more risk. The point of setting strict limits when you're starting out is to ensure that you're not taking risk that you don't understand. At $100 a call with 500 shares of leverage, I'm more than willing to lose the entirety of my premium. LQDA any good? It'll probably do okay. Would it be smart to sell GMECCs if we see another run up today for Friday's expiration? Yeah, I mean, if we get a nice run, then I'd feel comfortable selling some Fridays. There's 1,600 people watching the stream currently. All of us want to improve and figure out GME. Please tell us exactly how to find new ETFs and what to look for. I'd offer $5 to the finder. Surely others would chip in too. What's the harm? I don't want to go through all the aspects of how to find the ETFs. It's not relevant. And we can do it much faster because we already have the data compiled. How will we know when when the gamma balance is resolved? I mean, we don't. I was long BABA, took profits. Someone was saying that China was pumping during FOMC meeting. And if you look June 13, BABA at 99 to June 15, BABA at 108. So yeah, nice $9 pump. So that was also because BABA announced, like, China announced that they were gonna push through some legislation for increasing investor confidence in Chinese stocks and ensuring some of the risk on those stocks when purchased by foreign investors. There was also another pump on BABA up into like the 120s on the back of like the announcement of China planning to move into or China planning to move towards some QE into the latter half of this year. The tricky thing with BABA is it's currently super undervalued, right? But nobody has any confidence in it. And so what you get is you get a stock that runs up very, very rapidly, but people are also willing to sell at, very small gains because they don't want to take on the risk of continuing to hold it. So 100K a week CCs, 26 weeks equals 2.6 milli equals 86,000 shares a year. So only 3,000 years for you to lock the float. Sure. Kirk, there's 1.6K people in here. If each of us invested 700K, you'd be able to start a hedge fund. Thoughts? Anyone with me? I've got $5. Feels like it's the first green pre-FOMC meeting day we've had in months. Oh, green right now. That could change pretty rapidly. Let's see if this continues to break down. What's the next like bigger dark pool dump? 1269. Hmm. Did you look at Tilray? Is it death? Why? Why would you invest in that garbage? Yeah, I know it's cheap, but it's still garbage. Yeah, it's just dying. slow, steady death because Canadian marijuana companies will become irrelevant upon federal legalization, which everybody with actual money is aware of. If you want to invest in the future of marijuana, I what I always finish Paris. Is that Andrew Momoney's company? More like Philip Morris, yeah. What about CLVR? No. KO64C. Hmm. Interesting. Just because it's mispriced, or I think it's a little mispriced, but not much. Are you talking about the weekly? Is there any talk on Dave? No. The fuck is this? Why do you guys come to me with all these fucking weird Twitter stocks? Company does nothing. Please invest in us. 0% interest cash products in a rising rate environment. Well, that explains a lot. Yeah, there's a lot of this same volatility going on a bunch of SPACs right now. I'm not sure what's causing it. I don't care about SPACs, frankly. They're the fucking worst. Short the top. You're hedging the Fed minutes? I'm gonna straddle them. I don't even need to do a lot to straddle them because I have so many fucking puts. I'll just buy some calls. They want you to pump their bags. No. CRMB. Trimble. The daily. Yes. It's got a little ways to go, but it looks good. I would target that low range, like sub $58, $59. Hmm. Interesting. All right. So let's see. We're not falling below VWAP, which is cool. Obscene number of BBY calls. Same like upside half up straddle. Sure. No, we just have it data-based. It's not proprietary. All the data is public. But we're not going to give people access to it. Empower yourself and fucking figure it out. That's not my job. FOMC at 2 Eastern? Yeah, 2 p.m. It's not FO. Uh, yeah, it's 2 p.m. Eastern. That's right. Atlanta GDP negative 1.2% prediction. Well, it's a little better, but still shit. View up on SPY had 2 big moves down after 2 big volume candles. Mean bearish. Could be. It did break out a little more here than I would expect. Actually, this could be kind of bullish. This may be that push up to like 397. I still think it really wants to hit that high for them to reposition. So maybe we'll see it. I feel like they pushed kind of hard here and didn't get anywhere. The reason this database is made with public data that BlackRock have the login written on the wall, the lose at headquarters. What? Chimmy gamma imbalance resolution. Well, we're gonna find out if we continue to see it throughout the rest of the day. It still looks strong. We're in an uptrend. That tends to be bullish. Should I upgrade to Pigeonwell and finally join the Discord? I feel like it's time. I want you to do whatever makes you happy, John Wilkes Booth. Just checked. There's only 3 ETFs that hold a higher percentage of GME, and they're all sub 70 million in holdings. Yeah, most of those don't have an options chain. What do you think the likelihood that some hedge funds and investment bankers found out the CPI number this morning? There's no CPI announcement today. You mean the Fed rate number this morning and bought everything this morning? That's possible. Or they found out the Fed rate this morning and they're trying to capture all of their long positions back so they can go massively short. There's no way to tell. Would you say technical analysis is more or less accurate for low volume, mid cap, market cap stocks? Less. Less accurate. The more volatility you have, the less accurate technical analysis is. FOMC it's released at 2, and then the press conference is at 2:30 DC. If some didn't click reinvest, they're liable for cash in lieu. The split gave RC an honest chance to let the shorts get out. Good for court. Seems no one independent sold. What? No, people have been selling off for like 3 days. Also, I didn't click shit. I didn't have reinvest turned on at all and still got the shares. It didn't matter. Some people just still haven't received them, mostly foreign investors. New segment called the Pickle Tank, where you just roast tickers promoted on Twitter. That actually sounds really fun. John Wilkes Booth, thank you so much for becoming a pigeon whale. I appreciate it, man. Welcome to the Royal Society for the Advancement of Cooing and Other Lofty Goals. Pigeon whales, welcome, John. He's come to join you.
$99 straight to Kirk's pocket. He's gotta be a shill cause he's taking
He DM'd me something super rainbow.
He's got a gun to my head.
XLF.
Pigeon whales are the
Interesting.
highest class of society.
Oh, that's big bearish. Ooh, I like that. The person give you $10 to take a coffee break, but the markets, I can't. I don't want to walk away. GameStop's looking bully. Quite bully. Have you looked into Mo earnings for tomorrow? No. About August 5th, 425C, Gamba. Good luck. How the tips doing? They're kind of... Another Amazon rip. Warranted. People are gonna get too bullish on the Amazon earnings. Fuck, I don't wanna play Amazon now because the fucking IV is sky high. It's still shitty. Or 19s. No, 19s aren't too bad. They're still gonna get hit though. Jan? Barely worth it. So probably August. How are October? Oh, October's not bad. Oh my god, am I gonna get assigned on my Amazon cover calls? Amazon's gonna get hit on their Riven investment again, aren't they? Got it last quarter, but hasn't sold off yet. We'll see. Apparently the market is having Chipotle for lunch, plus 200 on the day. Yeah, I saw that last night. It fucking ripped hard. Well, it'd be a good opportunity for some in the money, out the money CCs. Well, yeah, I mean, if we get in like a nice rip above like 35, I'm gonna try to sell some like cover calls from Friday, probably like at max pain at like 35-ish. 35 or 34. What's up, trash? No way. Tesla at 819, 800p, and SPY 916, 380p. What do you think? Not terrible. I mean, you're buying them far enough out of the money now that you're not super exposed to a shift in Delta. If the Fed meeting's bullish, or the Fed interest rate is bullish. Yeah, not the worst. Just make sure you have some risk set if things turn against us in the afternoon. I want to get into options more, but I don't want to use margin. WeBull's deposit settlement takes forever. You can wire transfer into WeBull. I think most banks give you free wire transfers, right? As long as you have more than like however much money. You know, when Chipotle first opened up, it was amazing. Like the food was so fucking good. Um After they sold out big time, they just started getting progressively worse, and now it's almost inedible. Like I don't eat at Chipotle anymore. But yeah, when they first started opening up locations, it was so fucking good. Rice and beans can't change that much. Yeah, it can. And also, is the only thing you're eating there rice and beans? Has vegetarianism reached a point where I can just open up a rice and beans store? Probably do really well in the recession. I'm gonna do it. Who wants to invest? That's the whole business plan. We're just gonna open stores that sell various beans and some rices, and you can mix and match. And you get them dumped in a bowl, like $4-5. I don't know. How much does rice cost? Chipotle had a ton of fresh ingredients. They just kept getting people sick and had to adjust to safer suppliers. Hmm. How much can you make a month with 500 shares off cover calls? I don't know a lot about CCs, but we'll start learning from your reading list. Is 3 months enough practice to learn CCs? You've motivated me a lot. Probably. I mean, they're not super complex. Make sure you understand them, how they work, how to reposition them, how to hedge them. Paper trade, practice first. And then when you're ready, 500 shares, you can probably, at the current IV, get away with making, $500 to $750 a week. If you get good at it and you start being able to time our run ups and sell CCs in the money and capture that juicy or premium, then you can really make quite a bit. Do you think the market is pricing in some not known news yet, or just the big boys trying to reposition underwater positions? Yeah, I think the market moved down too hard yesterday. Like we didn't expect to drop to 390 yesterday at all, right? And that big downshift led to some of those out of the money positions, really needing to be recaptured. And so, I think we're seeing what's largely just a pump in order to reposition for the Fed meeting. Shut up and take my money. $4, everything is $5. Sure. How much could one banana cost? Perfect. So not only is the business profitable, but it caters to people that either want to eat rice and beans all day or people that can only afford to eat rice and beans all day, which soon will be a lot of people. I just buy a stack of tortillas and sit alone eating them with my hands until they ask me to leave. How? Okay. You're saying that when I'm ready, I can sell CCs at the peak, or that when I'm ready, I won't have to. BCG killed Chipotle. Did anyone talk about Tide going up over 80% today? No. You missed the top. Maybe they pulled the HFT algos forward. Like, instead we reposition with us in the casino. They paid the Fed to have the info. Oh, Jesus. I'm not even going to read that. Next year, I'm making a cool $5 a week selling cover calls on BBBY. I couldn't have done this without you, man. Congratulations, MachNut49. $507 a week, 500 shares. How? I'm doing this wrong. I sold CCs earlier this week at like, it was like 150. August 5th or what? Like 35 or like $129, $120. So like August 5th sold at 35 right now. 500 shares is what? $600 for next Friday. So maybe you're doing it wrong. I don't know. I mean, you can sell further out of the money. Like, I guess you could sell at like 40 and make less and be way safer. I mean, part of it is learning how to take the risk. Skirting that line is very important when you're selling premiums. Knowing when to take your cover calls off the table and like buy them back and reposition. Do you expect market crash? Do you expect a market crash by end of year? It's possible. I don't know if the Fed bumps rates kind of hard today, we could stabilize. Maybe like a low of in the 350s. You should team up with JFresh to extract the sulfur from the air in your restaurant. No dining in. I'm not gonna have any seats. Pure efficiency, right? That's what we want. We want to capture as much market share as feasibly possible with the lowest amount of overhead. So you got like one cook. You don't even need a fucking cashier, right? Everything's the same price. Just automate the teller. You just need one cook, and he just dumps shit in bowls and pulls it out of rice cookers. And then you just have room for a line. You don't want people hanging out, right? Soda machine somewhere. That way we're getting like $3 a bowl sold, right? I don't want a food truck. This is a franchise. We're gonna franchise this. Make the rice and beans place super bougie and call it pickles. I'm eating there every day. Kirk's traveling beans. 10-year, 2-year bonds doing a heckin' negative, and the 10-year, 3-month plummeting to almost the same level it was right before the COVID crash. Market seems like a win, not if. Thoughts? I think Japan's gonna capitulate on the margin between their CPI and PPI, and they're gonna sell off treasuries and fuck everyone. I think that's a win, not if. Gen Z are eating Tide Pods again. Bullish on edible laundry products. Chick-fil-A opened a few locations in my area that are drive-in only. Smart. I don't like them as a company, but smart. Reduce overhead. You don't have to pay for square footage for people to sit in if you don't have any people sitting in it. That's why I chose the hotel for my honeymoon. A bed and room for a line. Make the teller 10 feet off the ground and make them climb a rope to pick up the order. Gurk's magical beanstalk. Are selling CCs a good way to grow a smaller account as long as you keep cash in hand to manage the position? Yes, they can be. Especially if you're just long on something. I mean, I grew some of my like original investment accounts that way with AMD after it started to gain some value. Like just built up capital selling covered calls. Explain like on 5 the Japan situation. Japan is gonna have to reprice their bonds because the yen has been falling pretty consistently for most of the year. So, you know, their currency is devaluing, and their, you know, their PPI, I think, is at 33%, but their consumer inflation is at 2%, which is just absolutely fucking unsustainable. And if they reprice, they'll need to sell off treasuries. And when they do that, it will massively impact the US market, right? Because they have so many of them. They have like $1.3 trillion in US treasuries. And no one can really bail them out, right? Like IMF can't bail them out, the US can't bail them out. It would have the same effect if we bailed them out, as if, you know, they capitulate to their own inflation worries and sell off. This is why I am long yen. Also, I mean, yen is just oversold, right? The position's oversaturated by a lot. What's up, Snowdan? If you want to make it super trendy, you got to give it a name with at least one umlaut. Here's an example: flatulence. We can have all different kinds of rice and beans, though, right? It doesn't have to just be like one rice and one bean. You could have like a selection of like 6 different beans, like you could have like frijoles negros, like the like black beans with the garlic and the cumin, and you could have like pinto with, you know, the pork and everything, and you could have what else would be good? Red beans. You could have like some southern bean. What a southern eat? Black eyed peas or butter beans, something like that. You could have what's the one with the fucking chickpeas? It's the Indian one. Yeah, you could do lentils. Chana masala. That's it. And you just have like different kinds of rice, right? You could have like saffron rice. Like this is I got this. Don't worry about it. I'll write up the proposal. Oh, so much salt, dork. You just put the salt in it so it always tastes good, right? And it reduces the chances of foodborne illness. Japan's potential sell-off of treasuries, what kind of timeline are they on, if any? I mean, it could get worse, but not a lot worse. Is this another little dark pool dump? Be careful, Girk. That guy from yesterday is going to say you eat gay foods again. I'm still trying to figure out what a gay food is. Like dick-shaped popsicles or something? Is that even gay? If Japan sells off their US treasuries, interest rates will spike a lot. Wouldn't this fit well into the Fed's plans to raise rates to calm inflation? Sure. When I was younger, yeah. I like visited my grandparents there. Let me be the cook. Are you just gonna serve everything on your penis, Carl? What food is gay food? Like meat from animals that were gay? That sounds like some hipster thing. I'm not really sure, but someone told me that I eat a lot of gay food. You're the kind of dude who eats hot dogs the long way? What does that even mean? Like, so you have a hot dog bun, and then instead of like biting the end of the bun, a little hot dog bit, right? Yeah. So instead of biting here, you bite here. So it's like less gay. DJ, play the pickle track for all of us DJs. All right.
Pickle, 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 pickle.
Just gonna throw pressure cookers at customers that piss me off. I like it. All right, mass spectrometer. I'll see you soon. You consider yourself a culinary topper bottom. Sorry I started the gay thing yesterday. I never thought you were gay. No gay man would be caught dead wearing that VWAP hat. This is peak fashion. I don't know what you're talking about. So I look strong and resilient, only because I played some puts at 396. Do you have a VWAP hat guy? I do. If the GS bond thesis is correct, Fed won't have to raise rates as aggressively. Most likely 75 basis points today and a measured approach to future hikes. Bullish. Japan could go quite a while before they have to sell off. Like it could be a year out. It's buying a garbage ascending wedge all day. Yeah. Either that or that. Either way, it's bearish. Ooh, look, I've drawn a line. Forget the gay thing. I'm way more upset about the guy that floated the idea that you were bald. That's been a constant thing that's gone on since this stream started. Yeah, fuck that guy, actually. I don't know who he was, but fuck him. So the idea here to sell CCs for the next forever and MOASS, or that theory is all but dead and they've moved past it. I'm okay with either outcome. I have too many shares. I still think there's potential for like big upside moves. I don't think that's dead yet. MOASS, I don't know. Selling CC is just a great way to pay for losing money on those potential big upside moves. The 3-month yield and 10-year yield have almost inverted also. Yeah. You can just go long on yen through Forex. Hope you all make a killing. Thanks. Thanks, Matthew Hodge. Good luck with your transfer. Our purpose is to gay foods. Our purpose is to nourish people on the planet. We're a purpose-driven gay food company that aims to set the standard of excellence for food retailers. Quality is a state of mind in gay foods market. We put the gay in you. Nice. I like that. Also, good motto. I know this is surprising, but against all odds, I've lost money today. It's not Popcorn Trader. There's ETFs you can use to go long yen too. Sorry, Len. How in the actual fuck is Google up 7%? Well, first they missed earnings, and then they lowered forward expectations. When you said you visited your grandparents, what country was that in? Italy? What's the best spot to eat? Fuck you, turd. We'll call the restaurant Bean Flickers. No. I don't know. I'll think of a name. Is Franks and Beans a gay food? No, it's a children's food. Check your DMs for me. Is it important? You didn't DM me. You just told me to check my DMs, but you've DM'd me nothing. What the fuck, Daniel Taylor? Call it second harvest. Jesus Christ. Bean Fiend? That's not bad. Call it Frank's Beans? No, I don't like that. I don't know anybody named Frank. If I eat a banana, will I divorce my wife? Probably. Thanks, trash. Interesting. Sure. Can't hurt, right? 'Expect Jimmy to move up into Friday. No, not necessarily. Ooh, Dixie's up. This run's gonna die. $12.30. Still got another hour and a half. You check TTD. No. That's interesting. Curious. Shorts bailing, maybe? Tesla, Tesla, Tesla. Oh, my calls. Yeah, sure, Daniel. What's up with Janky VWAP on the SPY? Oh, it's just volume traded. So you get big volume spikes and it can throw a VWAP off. Happy 7 months. I may have missed it because I've been so busy at work today, but why is the market pumping so hard? No one knows. 10 months, yeah. Rug Pull-Hippopotamus is still here. Welcome back. I'll be ready for the day drinking rug pull party later. Ciao. Smoochy down downs for all. Thank you so much, Rug Pull-Hippopotamus. The magical fruit, the more you eat, the more you toot. The more you toot, the better you feel, so eat your beans at every meal. Nice. The problem with the leverage ETFs is they're depreciating, right? All the sus, is it time to bus? Probably. I'm gonna start eating nothing but beans for lunch every day so that I won't have to be in the office anymore. They'll definitely move you to work from home. Jimmy was really the reason for the big market big sad. And it should be over for now and spive up. Why the fuck would GME be the reason for the market doing big sad? It's such a tiny fraction of the overall market. Financial education question. What is sus and what is bus? Busing is full porting. Sus is when you don't trust the price action that's going on, I think. I don't know. I haven't really defined them clearly yet. It's a work in progress. 90 days, daddy. You can't get rid of me that easily. Is this the greatest market-wide bull trap in history? Not in history. Where? There's a super stonker? I don't see them. GME follows Tesla. There's similarities between the two, yeah. They both have lots of volatility swaps. I put in a buy order on eToro for 32.20 today. I use eToro for leverage trades, and it didn't fill because of the spread. Do you think we'll see low 32 again? Possibly, yeah. If the market is bussin', but everyone is sus, should we be bussin', aka a bussin' sus bus? Okay. You're a rock star for the community. Been a lurker for about 8 months now after blowing up my portfolio learning from you, Rick of Spades, aka Matt Kors. Oh, thank you so much, Lord of Lard. I appreciate it, man. Spy sub 390 today? No. Well, that'd be crazy. The market never knows what priced in means. There's the efficient market hypothesis is horseshit. Like Haagen-Dazs, just make it sound European. Rosabon. It's selling $4 rice and bean bowls. Legume Saloon. Alright, I need to set stops on some stuff and make coffee. I'll be right back. Almost. Oh, it tapped it. It tapped 397. It's in the zone. So it's either going to rocket up to 400 or fail. Let's buy 395 in the cards today. Sure. I mean, we're only $2 up. All right, I'll be right back. Yeah, I closed my cover calls this morning. Jimmy 15-minute looking bullish? Not really. The 1 hour kind of is. No, not on here because they don't adjust. They haven't adjusted it yet. Ooh, tips almost crossed. This looks pretty good. Explain the extremely low volume on GME today. It looks to be the lowest all year. It's at like 500,000. It's really fucking low. I've sent you the restaurant design idea. Amazing. We're definitely gonna have to go back to the drawing board with this. But I like it. It's beautiful. This pump is like we're back in time just after the COVID crash. Weird. Hey, I was right. Let's see if I can break back down now. There were always covered calls in the pickle stand. I never understood why everyone gets all stoked if the SPY breaks down, but when I do, it's a bad thing. Oh, sweet trash. If only you knew. It's either going to rip to 400 or it's going to get rejected. Hard to be wrong on that one. It's true. They're saying it's perfect. How long are you holding those GME calls? Probably till they're worthless. Did you see the post on Superstock showing 40 million shares of GME borrowed? No. Also, why would I care? And no, it's probably incorrect. Yeah, if you're going out anyway, Carl. Just so you know, Turd, the Turdferg fund is down 20%. Assets under management are now at $180. It's liquid and ready for a re-entry. I just transferred shares from one account to another, but they're showing in both. Free stock split? I'm going to be a gajillionaire. Average Joe made this. Do I see what they're doing to the SPY and the VWAP? Trading high volume at different price points? When you're selling 0GT SPY puts or calls, do you just use market orders since it's so liquid and spreads are tight? Fuck no. Look at the BBY chart for me and tell me if that looks like someone is buying in. No. No, it doesn't. You may check options? I just want you to know, Doric, that your paper trading account has more leverage on this chain than the rest of the market. Are you sure this is the best ETF to get exposure in? Well, you don't have enough money to buy Tesla calls, so KO $63 put it is. You're gonna have to use margin to buy two. It's okay, I'll front you. Where do you want the stop? It's just the time and sales. Yours is way different than mine. Looked like people were selling all afternoon. Huh. Don't let him front you. I'll take your house. Churdford lives in California and is not above the age of 60, so he probably doesn't own one. So we're riding him into the ground? Got it. I need to borrow some money for an ISDA. Get fucked, Carl. I never thought I'd be jealous of terrible spy calls. When's it my turn to be ridden into the ground? All right, calm down. This isn't Jimmy After Dark. It's not an efficient market, Mike. What am I going to do with a four-man tent? Has Superstunk apologized yet? Not officially, no. What can you trade without an ISDA? It allows you to trade swaps and complex derivatives. Tango Delta going dark. Would you hold 819, 394 puts or close and wait this out? I've only bought more. Confirm spy fail, or is it all just a trap? Everything's a trap. I don't have to sell most of my Gmail shares to move them to my US broker. I'm going to do it in small chunks. But when would be best to do it? After August OPEX? I don't want to miss any potential runs. Yeah, probably. Less dangerous to do it afterwards. Do you really want an Italian guy with maybe ties to a fraternal organization to front you no money, no questions asked? Seems kind of worrisome. No. By the way, turd, the VIG's 15%. Getting banned from SS is probably the best thing that ever happened to you. How much money do you think you've made on covered calls since? A bunch. Afternoon pump, SPY 400, asking for my double down puts. We'll see. Fed meeting's in an hour. Yeah, like an hour and 2 minutes. We'll have the release. Did they unofficially? Not really. Some former moderators. My ideas of the efficient market hypothesis, the only discernible information that can be gathered from the market comes from the trades that are executed in said market. Fair. I took your non-financial advice and I'm now the proud owner of SPY 818 puts. Wait, that's not an expiration. 817? What an odd choice. Try to prepare for the Fed's announcement. The last time they increased interest rates, the market went up, then it went down. Should I plan for the market to go up and down again? It's called a straddle. Full disclosure. It's crazy to me how risk is, it depends. Well, it does. It's a variable. I have no idea what VIG is. The Vigorish. It's the fee charged by a bookmaker to the gambler. X 18x for you. My dude bought back alley puts from the mob. I hope those puts pay off or it's your knees. The chat got way less annoying after the SS ban. Well, it got more. It became easier to identify the division. So at 2 p.m., the Fed will release the BPS hike, and at 2:30, they'll just talk about plus how they will move forward. No, they literally just read the notice that they release at 2 p.m. They generally don't do too many questions. And if they do questions, they answer them by restating the things written on the report. While waiting for big dumps, thought I'd float an idea. What if there was another membership level above Pigeon Whale that allowed lurking in Concord and live stream into your apartment? No. That sounds terrible. I'm not doing that. My workload has basically quadrupled over the last 2 weeks. I'm really sorry that I haven't been able to troll you like usual. It's fine. I haven't missed it that much. I get it. You got things going on. Whatever. That sounds like Pontiff. What would it be called? Girlfriend level? Looking in Concord sounds like learning how sausages are made. Big downs in an hour? We'll see. Girlfriend experience. Jesus Christ. Ooh. There's technically some more upside room on this, right? What time frame did I draw this on? I just want us to get this other shoulder and drop down to 373. You know what? Fuck it. I'd even take 381. 381 would be fine too. What if the membership cost was 250K a month and someone was willing to pay? Would you still do it? I mean, yeah, I would do that. That's a lot of money. What do you think global exposure is to Chinese property assets, projecting a 30% drop in value? Now at this point, probably significantly reduced from where it was like quarter two of last year. I know BlackRock pulled back a lot of their Chinese investments, as did a lot of other big US investment banks. So I don't really know how much global exposure is there anymore. There's still some. Other stack says SPY touches 388 end of day. Okay. I'm down. I will be big spoon that dude, and he can use my Discord for quant cord lurking if he's willing to fund my options account. I'll big spoon that dude. Hey, you can't sell out your access to the quant cord, turd, alright? I don't care how underwater your options account is. I have 600 shares. How long of selling CCs to reach 250? 250k? Let's find out. So your initial investment is... That doesn't work at all. Why don't I own a financial calculator? Where's my song, Pickleman? Oh, shit. Thank you so much, man. I appreciate it. Hit me up on the Discord.
Happy birthday, Gherkin.
After the stream, I'll get you added.
Yeah.
Sorry about that.
Yeah, we might have a chance, but we ain't got rolls.
Excuse the newbie question. Would it be smart to buy 729 SPY calls out the money to hedge my August 395p in case the market rallies on the news? I mean, that's what I'm doing, just to straddle it anyway. Pop them up. SPY dead. Ooh.
Might be apes, but we ain't that Joe. Motherfucker, trade this is popcorn cold. When the Citadel fails, I'm Obama on boat. Sail the Elliott waves like a Kramer on coke. Yo, but we ain't no cult.
Interesting. I wonder if I can kind of fuck with this. And then I do... turn this off. Ooh. Hmm. Looking good. Visa just died. Oh shit. What the fuck is this? Their news? Dude, Visa's getting fucking hammered. Didn't their earnings already pass? Snap and Twitter breaking down hard. Hmm. Not nearly as hard. Hmm. Earnings at 728 with a lot of guidance. No, but you could try it. When a trademark by a bankrupt company traded on OTC market, the hedge that still have short positions never closed, but must close the positions during the acquisition. What? Several analysts downgrade Visa. Made my own person decision to enter V despite your targets. V just crashed and I'm rich now. Nice. MasterCard down too. Weak dollar. The dollar is fucking rocketing. Senate potential action on Visa and MasterCard. What's the action? Wouldn't Amex be hit hardest by that bill? That's kind of what I'm thinking. I mean, they're getting fucking hammered too. Not as much, but still. Ooh. Interesting. Senate bill hitting Visa MasterCard fees. Limit credit card fees. You make me sad when you can't get through my simple question. Dude, I don't even know what your question means. Are you streaming the JPOW speech? No, I mean, I guess I could, but I wasn't planning on it. Chips just passed the Senate? That's good. Doesn't seem like anyone gives a shit. Why don't you answer my question about the gaps? What was the question? Probably because I didn't fucking see it. If I saw it, I probably would have answered it. How comparable would you say the new volume is to old volume after the split? If we divide today's GME commune, it's less than 1 million so far. Yeah, it's just less than 1 million, right? I mean, it's a previous volume, but previous volume's irrelevant now and is also multiplied. If their stock goes to 0, does that mean I don't have to pay back the CDU that I bought on credit? No, your credit agreement's probably not with the credit card processing companies directly. If J-Paul wants to save the economy, he should walk out in a suit made of €100 bills. Jimmy looking like a fractal of the 2-year view. Don't you say those things to me, dork. Superimpose yourself over JPA's speech like you did last year and doodle on his face again. Dear God. Do gaps usually get filled? Sometimes. It depends on where they're created. Not always, though. Trading gaps is not very profitable. I can tell you that much. Doesn't the dollar usually go down when the market is going up? Yes. No problem, man. Depends on the girl from my experience. You know, Butt Liquor 69. I feel like you might be misrepresenting your curriculum vitae. I just took 12% profit on a spy put. Probably could have done better, but didn't have enough settled cash. Probably learning to play it a little safer. Thanks. No problem, man. Can you check GME options flow? Yeah, what do you want me to look at? Probably bullish. It was pretty bullish earlier. Yeah, pretty bullish. Bunch of bot calls. Lots of weeklies. It's probably all just us. Please pronounce his name as Butt Liqueur. Are you selling GME CCs after the Fed meeting? I don't know. I had a sell order for one of my AMC puts, and I saw that the last price was the exact price of my order, but I didn't fill. Thoughts? I mean, maybe the last got a better like spread than you. And the last is based off, it's not based off like bought or sold. It doesn't matter. Going off the mid is probably better than trying to go off the last. I feel like a lot of you guys struggled trying to fix to such rigid trading strategies. Rigid trading strategies. You think Jimmy is at risk of going bankrupt? Not really. Is there a point where you would exit your shares to the downside? If IV went below like 25%, I'd probably consider exiting the stock. So never. Spy chop as I'm straddling. Turd, when is this Coca-Cola play gonna make money? Why isn't it, what if they never reprice the chain? Why does anyone buy the deep in the money puts instead of just selling their position or buying ones at 99% delta or something? What's the advantage? Deep in the money puts, they're like a bullish credit position. Oh, buy deep in the money puts? It shorts the underlying. IV 30, it was like 92 point something this morning. It's in the daily DD. Over the next 84 years, Jimmy looking good to me. Thoughts? Ascending triangle? Yeah. Eh, like a wedge, but lower highs, right? Consolidating though. It doesn't look bad. It's got support to the downside at VWAP, so. Did you see Coca-Cola's marketing disaster around Fanta? No? Fanta? V drilling. Yeah, I heard. Why buy GME 950 Ps when you get the same NM hedge with 300 Ps? Are you talking about like, well, when the fuck are they, who's buying 950 Ps? I mean, if you're seeing 950 Ps bought, it's probably just them making money on arbitreurs, if you will. Trying to fleece the market maker. How does SPY put call ratio look to you? I don't have it live. It was put favored earlier. Where did you come up with 25% IV on GameStop? Well, that's the point at which selling cover calls on GameStop will no longer be worth it. Since you're planning on having kids, can you make me your beneficiary? No. Only way I ever sell is if I hit my exit price. Like Mark Cuban says, only way we lose is if GameStop goes bankrupt or delisted. And that won't happen in this situation. So MOASS is still on. Ignore shill. You sound like the shill. You sound like you've just made up a bunch of things about how the market works and you've chosen to believe them regardless of the information freely and readily available to you. Good luck with that. Is it normal still I haven't received my extra shares? My bank told me it could take up to 7 trading days. Where do you live? Like, are you in the US? If you live in the US, it's kind of abnormal that you haven't received them yet. Because the WeBull redemption through the DTCC was due on the 25th. They have to pay fines for every day after that. If you're international, there's all kinds of fucking weird shit that can happen, Ricardo. Wouldn't collab with Warren Buffett. How dare you pronounce Fata like that, you snob? Look what you made me do. All you had to do was call me an idiot. Sold the gold foil piece. Fuck it. I'm buying a Wendy's dumpster. Hiring experience. Dan's. JPA's $100 Euro jumpsuit. Beautiful. You need to change the dollar symbol to the Euro symbol, though. And then you can just remove Euro from your name. So it can just be JPA's and then Euro symbol 100 jumpsuit. Just a little editing before you go to print, you know? Any thoughts on Brazil, Russia, India, China, South Africa working toward creating a new global reserve currency? No. I also don't believe the moon landing was fake. So shills do exist, I guess. I didn't call you a shill, Chris HJ. Chris Handjob? Hmm. Have you met the Dans? I love it when the bag holders with no ability to challenge themselves or learn new things come in here. Me too. Jimmy 35, 729 has a lot of OI. It does. Do you ever sell cash secure puts on Jimmy? Fuck yeah. Why would you collab with Buffett so you can steal more of your trading advice and market it as his own? I mean, but like, who the fuck wouldn't want to hang out with Buffett for a day? Really? It's like if you like sports ball and hanging out with one of the greats. I'd go fucking eat a McMuffin with him, you know? Perfect. Sports ball? So how are we feeling about the Burry tweet? Which one? Was it one of his rants about gun laws or something more sane? Opinions on Ryan Cohen's tweets on short sellers months ago. Who cares? I mean, clearly nothing came of it. Actions speak louder than words. The last one about the last hooray. We're experiencing a mild bout of frothiness in the market. It won't last. But if Burry's saying crash now, it's going to take at least 9 months. He just keeps pushing it out. I don't know why. Burry has predicted 873 of the last 2 crashes. Can you expand and pontificate about selling cash secured puts on GME? Thanks for all you do. Didn't I make a video about this yesterday? I thought I did. You look for a bottom and then reap a bunch of premium off of short sellers. Talk is cheap. It takes money to buy whiskey, but here are a billion useless tweets. Yeah. Burry Sam like goalpost installer. Where in the village do you look for a bottom? Grinder, probably. As the name implies, do you have to have cash for CSPs or equivalent margin? Otherwise, or you have to be approved to sell naked puts, which if you don't know the answer to that question, you definitely aren't. He asked where to find a bottom in the village. I answered correctly. Didn't I trash? Where's trash? If we have 75 BP spike go up, 100 go down. No, because the most likely outcome is 75 for July and then 75 for September. And this is bad because the current projection is 75.50. There is a chance that they go 175. And that's very bad. How do you minimize risk with cash secured puts? Sell at a lower delta? Well, technically a higher delta because the delta is negative. Think of just like, I don't understand what's so difficult about cash secure puts and cover calls. think of it this way, right? You've got like, oh, fucking Christ. So here, you got at the money, like 0.5 delta, right? You've got out of the money. Point 0.4, 0.3, 0.2. And down here on the put side, so calls, puts, you got like negative 0.4, negative 0.3, negative 0.2, negative 0.1. So, which do you think are the least risky? Are they going to be these very near the price action? Or are they going to be these that are far out of the money? So, low risk, higher risk, lower risk. Stop asking me about them. Dear God. I got fucking Stefan DMing me like, hey man, can you extrapolate on covered calls? No, there's nothing there to extrapolate on. It's super fucking simple. There's a reason that they'll approve anybody to sell covered calls. And I mean anybody. You already did the hard part. You bought the shares. RC move covered calls. Jesus Christ. Will we get a punch card for the rice and beans? And once you fill it, we get a free stock pick? No, you just get another bowl of rice and beans. I mean, you can even sell cover calls on Craigslist, so... Join Greg Saturday at 1:30, and he will answer all of your covered call questions with a smile. Dude, I don't even stream on Saturday. Oh, I get it. 15-minute looking like a breakout soon. It looks nice to me. Eh. Looks... I mean, it's... We found a bottom? It looks okay. We've been talking about breaking out for the last fucking 3 hours. Is the 32 resistance related to 126.70? Yeah, it's really close. 126.70 would be 31.65. But we don't know where that new resistance is going to fall, right? Because of the new options chain. But yeah, it's very close to that. Now that I've got my free membership from BitHead, do I get discounts on covered calls you sell? No, that's only for pigeon whales. Thoughts on Tesla right now? Good time to sell CCs or risky? Not a terrible time to sell CCs. You might want to confirm the downside after the Fed meeting first. There's no strategies. Just wait for a bottom and sell a bunch of cash secured puts. I'm considering how much GameStop am I willing to buy if it goes south. That's the biggest concern. The second biggest concern would be, is this actually the bottom? So, because ideally you don't want to buy any shares, right? If you're just selling them for premiums. Deep fucking abundance? Where did that name come from? You never answered that guy on how long to make 250K selling CC with 600 shares. Oh yeah, it's like 3% a week, so compounding. Here, I'll do it. That's what, you had $20,000 roughly. Let's assume no contributions. Point 0.5 a day. Week. $400 a week. Average. 20,000 a year. And it depends on if you keep reinvesting. Is he going to reinvest? Did he even say? Or is he just going to keep the same shareholding size? Are you going to stream the Fed talk? I mean, ideally, no. I would just get the paper and then read it. If the fan leads on 0.75 and 0.75 forward, but GDP comes out at 0.3, so not negative, how do you think the market would react to something like that? It'd probably be fairly neutral. I don't think the GDP is coming in anywhere near positive. Everyone's been lowering forward projections, right? Vacation? Who does vacations? What a waste of money. My VIX call isn't expired, but Fidelity is telling me it is. I cannot roll or sell to close. Maybe call them? Was it a morning call? How risky is it to sell CCs if you only have 118 shares? I mean, not very, right? Your risk is minimal because your capital outlay is tiny. Assume the same share amount? Like a little over 5 years? That also assumes like the same price of the underlying over that time, which is probably not true. Aside from your DFEs and Adabits DD, has there been any other GME DD that you think is important? Wait, whoa. You've added an extra name there. Is there any DD that should be done and hasn't yet? I mean, I think most of the things have been at least attempted. There's probably DD that needs done that's not able to be done because the data is not available to us. You should read Turds DDs and Zinkos. Those are very good. You should read Gaff's DD. And JFresh's. What's up with JJG not updating price today? I don't know. Did they limit up halt? Please don't ignore this again and answer honestly. Have you ever had a dream where you want them to do you so much you could do anything? What? I don't know what you're talking about. Narrate the important info. Easier for people on the Discord. True. By reinvesting 3% returns a month with 600 shares perfectly ends up being something like 7 years. 3% returns a month is a little lower, but yeah. Where's Carl? This is Carl's job. Carl's supposed to be the one calculating compounding interest. You buy a put contract and sell in the same day. Yes. I think he's ignored that question 5 times because it doesn't make sense. No, we had to close the daycare, JC, because cholera. He tried to pull a classic Amish deception on you. Yes, read all of Turd's DD and then ask him questions about it. He loves that. No little halt that I can find. Charge of stops before after hours last night. Price white at 71.70. I find this very hard to believe. Yeah, it's open. It's trading at 72.51 right now. I'm not sure why you don't have any data on it. Can you describe Papa Pickle stall on the screen for those who are driving whilst listening? Stop writing in chat while you're driving. Imagine a market barely holding it together when the interest rate isn't even 2% yet. Actually pathetic. So what am I CC? What happens if the person just sells to close and takes profit? Nothing. No, your option is still open. The counterparty is irrelevant to you unless they exercise. If they exercise, you lose your shares. If they don't, then the option expires. Do you think you'll sell more CCs today? Maybe, maybe not. Won't answer any of them. Make sure they're weird and oddly personal. Have you read Love in the Time of Cholera? Maybe. Oh, I've gotten blurry. Stop censoring me. The fuck? Hold on. Sometimes if I just like... Nope, that's not working. Oh, you piece of shit. There it goes. News from the Fed isn't out yet. Because you're fairly certain GDP will come in negative. What would JPOW need to announce today to offset that negative effect? 0.5 and 0.5? YouTube says Fed meetings at 2:30. The meeting. They publish the report 30 minutes in advance of their bullshit press conference. Oh no, in 7 minutes I'm just going to watch The Spy. There's not going to be any dual screening. No, the bear market's not going to end. Is no one looking at the same fucking market I am? You see this consistent downtrend indicative of a bear market? We would have to break back up above like 435 for the bear market to end. And that's very unlikely. I'm down, but it's very unlikely. But there already is a spy poll, JC. Shut your mouth. You're the shill. I don't know who that is, Heath Dill. Pole's coming in hot for downs. I think I'm gonna buy some calls. Ugh, that IV spike. Fuck that. Mm. Weeklies are overpriced. Not yet. Not for 3 minutes, Champ of Roses. Ding ding. Ah, give me the goods. Recent indicators of spent production have softened. Nonetheless, job gains have been robust and unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. Russia's war against Ukraine is causing tremendous human and economic hardship. The war and related events are creating additional upward pressure on inflation or weighing on global economic activity. The committee is highly attentive to inflation risks. The committee seeks to achieve maximum employment inflation at the rate of 2% over the longer run. In support of these goals, the committee decided to raise the target range for federal funds rate to two quarter to 2.5%. It anticipates that ongoing increases in the target range will be appropriate. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities as described in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in May. The committee is strongly committed to returning inflation to its 2% objective. In assessing appropriate stance on monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. Blah, blah, blah. Yeah. Yeah, 75 BPS. $75.75. I don't think this is that bullish. I have some calls though, so I'm good for now. Yeah, it was expected to be 75.50. This isn't necessarily bullish. You'll see. Yeah, I don't think the price action 3 minutes after the report comes out is indicative of the direction the market's going to take. $50 out of calls there. Profit. This is the second 0.75 increase with additional 0.75 increases to come. This is not bullish. Everyone reacting to like this brief fucking rally was... Yeah, made a few $100 on the rally. We'll see. It can remain volatile throughout the rest of the day as more positions are, you know, shifted and... Bearish as fuck. Bulls are morons right now. Well, I think most of the bullish price action is just due to repositioning, right? Here's what I think. I think the big investment banks prepared to straddle at like 4,000. And then we tanked the day before. So when we hit aftermarket with the Google and Microsoft earnings, they got a little pump and tried to take that back up so they could reposition this down. No, I'm gonna hold my calls. Explain straddle like I'm 5. Long put, long call at the money. The last 2 years have taught us anything is the SPY only goes up. Where were you for the last 7 months? When would you feel comfortable selling CCs again? If I'm convinced the gamma imbalance is resolved. I do have puts. I have shitloads of puts on everything. So on your daily DD, you said hitting 33.99 would be bullish. Well, we got close, but it doesn't confirm anything. Yeah, we did get close. How far out do you buy straddles? I mean, it's up to you. For something like this, I probably wouldn't even... I would probably buy like 0 DTE or 2 DTE. Damn, increased rates into recession announcement tomorrow. Otter-ish. Check your DM when you get a chance, but don't get too excited. Just something to fill the void. Ooh. Thank you so much, Ben. It's amazing. I finally have music to start the stream on. Again. J-Pow off Jackson's hole now. See you in September. Thank you so much, Ben. I appreciate it, man. Yeah, we hit 20,000 subs. I've been doing my best to drive it below that. I've been saying mean things about MOASS, dogs, insulting people generally. None of it's really worked to drop the bottom line there. So I think we've found a new floor. Do you expect more spy downs today or tomorrow? Just forever. You said to eat your dog during a recession. Depression, not recession. The new the new floor is our functional alcoholism. Did you get a flask? I think the only way to drive away the rest of us is to go full on YouTube streamer and pump up that energy. Oh, now I'm exhausted. Instructions unclear. I got depressed and ate a dog. Oh, Jesus. No, don't do that. Insulting MOASS to drop your subscriber count is like buying millions and in-the-money puts to drop a stock. As long as it keeps them DRSing, right? Would you ever buy a straddling at different expirations? Hmm, that's a good question. Yes, you could, but it also begs the question why. Like if you expect near-term ups and then like long-term down, why buy both? You're unsure of the near-term up? I won't expect anything. Rob Davis, Redneck Picasso. I hate the SPY so much. Why? It's just doing its thing. Relax. Occasionally I'll stop by the daily thread and SS and say, DRS is working. Push more. Why does gamma imbalance matter for cover calls? Does that mean you're expecting a run? Possibly a small one. GDP numbers come out tomorrow morning. Maybe you're long-term short, then hedged for bullshit like today. Well, I mean, like today I have shorter dated calls than my long-term puts. So sure, yeah. Technically, spreads are probably a better way of doing that. Yes, decay into my profit zone. Does the SPY action make your straddle a failure? Well, the straddle is just a hedge potential upside, right? So if I lose like 5 to 10% of the premium, that's the cost of hedging. Gamma max is 45. Red Ranger. It's right there. Nancy Pelosi's husband just dumped his Nvidia position. Bullish. Are you playing the JPOW speech? Uh, do we want to watch him? Here, I'll do another poll. Nice, KJ. Congratulations, dude. Only if you meet him and commentate on what he's inferring again. Why does SPY and Tesla continue to pump? Why are you so impatient? They just bumped rates and then with a plan to bump them equivalently in the future. This is not bullish. You're freaking out because investment banks are repositioning their hedges, which is basically all this is. I mean, stocks don't always go up. Not this year. I'm impatient this morning because I forgot to take my Adderall this morning. Squirrel, when big downs, Jamie to the moon. Time for an ice cream sandwich? It could be. I've decided not to treat myself to ice cream sandwiches until my options print again. Bigly. Is it fair to say 2.8 billion volume is equivalent to 700,000 after the split? I mean, technically, no, it's just 2.8 million volume. It's very low, right? I mean, you can just look at like the 3-month average volume. There's no point in trying to revert back to like the old price or the old numbers. Those are gone. You have to move on now. Jimmy's new all-time high, 120. What do you do with trading losses besides eating ice cream sandwiches? Mostly just maybe eat more. The question is what kind of ice cream sandwich? Yeah, we could sell ice cream sandwiches at the pickle place, like as a dessert. You always have to have like a weird, kooky item like that you sell that's really off-brand. People like that. I don't know why. They're like, oh my god, they have, but they also have ice cream sandwiches. It'll always be 483 in my heart and in my cost basis. Last FOMC, we pumped a bit into close and fell the next day. Yeah, I know. Actually, all of the last FOMC meetings, I think that happened. Like I ordered this noodle bowl from this place the other day, and it was like chicken and vegetables or something, and like I don't know what kind of noodle, glass noodles, something like that. Anyway, like for some reason in the bag they also gave me like a handful of shitty Halloween candy, like like a Tootsie Roll and a Twizzler, and I was like, that's really strange. Example of weird combos: papaya juice and hot dogs. That's a New York City staple. Yeah, it's super weird. Also, papaya juice tastes like soap. Did you eat it anyway? No. I kept them. Like, I didn't throw them out. You sold their gift. It was just very, like, what a weird choice. Hot dog juice from New York is where it's at. Show us your Tootsie Roll. You gotta pay extra for that. I actually did the most recent logo for Papaya King and all their stores branding. Huh. Pineapple orange guava. No, but that sounds delicious. Do you draw your trend lines with extended trading hours or RTH? Depends on the underlying. Some stocks don't do shit during extended hours, and you don't need to use them. But to be fair, if they don't do anything in after hours and you leave them on, you just have to make your lines longer. What about the SPY? We're looking at it right now. Oh, SPY definitely. SPY moves a lot in after hours, and it can hold those moves into the next day. I don't love pineapple pizza. We're talking about juice. I missed the poll results. Yeah, apparently we are. We are gonna watch Daddy J Pal. You know, of all the people in politics and appointed positions that aren't voted in by the public, I really do like J Pal the best. The man's made me an obscene amount of money. And he's just, he's a breath of fresh air. He's so vivacious. I'm gonna vote for J Pal even if he doesn't run for president. Jimmy Gamma imbalance run still possible? Sure. It's also the harbinger of financial destruction. Yeah, but, give and take, right? Thanks, Dominic Joseph. Listen, Melissa, you know it. I know it. There's no denying it. Powell's a silver fox. Men want to be like him, and wives want him as a boyfriend. For swing trading, do you prefer stop entries or stop limit entries? I don't use either of those, generally speaking. I would bang Powell for higher interest rates just so my puts print. Remember when Christine Lagarde addressed him by his first name? Jerome? Yeah, I do. How could anyone forget? That was the sauciest moment in like world banking history. Oh yeah, Jay. It was even worse. The fucking IMF had to take their shirts off because it got too hot. J Powell's the only man in history to fuck both America and Europe's monetary policy simultaneously. Legend. When you're playing the market, do you prefer a PlayStation, Xbox controller, or mouse and keyboard? It really depends on how intense it is. Who was the president that would show everyone his dick? Was that Lyndon B. Johnson? I'd vote for a guy like that. Clinton? All right, let's watch Daddy Powell talk. Let's see if he can ruin the market.
It will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down to our 2% goal if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability,
He's just reading the
current
thing.
picture is plain to see. The labor market is extremely tight, and inflation is much too high.
Yeah, you like a tight market, don't you, Jerome?
Against this backdrop, today the FOMC raised its policy interest rate by 0.75 percentage point and anticipates that ongoing increases in the target range for the federal funds rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. And I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Recent indicators of spending and production have softened. Growth in consumer spending has slowed significantly, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened, in part reflecting higher mortgage rates. And after a strong increase in the first quarter, business fixed investment also looks to have declined in the second quarter. Despite these developments, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 375,000
All of those things are
jobs
bad.
per
Why is he
month,
trying to say wage growth is a
down
good
from
thing?
the average pace seen earlier in the year, but still robust.
Talk about how you want the unemployment to go up.
Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. Overall, the continued strength of the labor market suggests that underlying aggregate demand remains solid. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in May, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core PCE prices rose.
Don't think I didn't notice
4.7%.
you noticing me. Why do you think I made you all that money?
In
I'm
June,
expecting
the
you to take
12-month
me out
change
somewhere
in the
nice
consumer
before we
price
head back
index
to your
came in
place.
above
And I
expectations at
judge your
1.1%,
quantitative tightness.
and the change in the core
Thanks,
CPI
Jerome.
was 5.9%. Notwithstanding the recent slowdown in overall economic activity, aggregate demand appears to remain strong. Supply constraints have been larger and longer lasting than anticipated, and price pressures are evident across a broad range of goods and services. Although prices for some commodities have turned down recently, the earlier surge in prices of crude oil and other commodities that resulted from Russia's war on Ukraine has boosted prices for gasoline and food, creating additional upward pressure on inflation. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 2.25% to 2.5%. And we're continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings. While another unusually large increase could be appropriate at our next meeting, that is a decision that will depend on the data we get between now and then. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. As the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. Our overarching focus is using our tools to bring demand into better balance with supply in order to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer run goal. This process is likely to involve a period of below-trend economic growth and some softening in labor market conditions. But such outcomes are likely necessary to restore price stability and to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
No, you don't.
Hi,
Give
Chair
me
Powell.
a-
Thanks for taking our questions. Rachel Siegel from the Washington Post.
Sweet
Wondering
exit
if you
on my
can walk us
calls.
through your thinking around the decision not to go for a full percentage point increase. We saw a ramp up after the May CPI report came in hotter than usual, and then obviously the June figure did too. Was there any discussion of a stronger hike at this meeting? Yeah, thank you.
Sure. So we did judge that a 75 basis point increase was the right magnitude in light of the data and in the context of the ongoing
visible.
increases in the policy rate that we've been making. I'd say that we wouldn't hesitate to make an even larger move than we did today.
You're just
if the
looking for
committee
me in the
were to
wrong
conclude
place.
that were appropriate. That was not the case at this meeting. There was very broad support for the move that we made. You mentioned the June meeting. We had said many times that we were prepared to move more aggressively if inflation continued to disappoint. And that's why we did move to a more aggressive pace at the June meeting, as we said we would do. At this meeting, we continued at that more aggressive pace as inflation has continued to disappoint in the form of the June CPI reading.
Thank you so much for taking our questions. Colby Smith with the Financial Times. As the committee considers the policy path forward, how will it weigh the expected decline in headline inflation, which might come as a result of the drop in commodity prices, against the fact that we are likely to see some persistence in core readings in particular? And given that potential tension and signs of any kind of activity weakening here, how has the committee's thinking changed on how far into restrictive territory rates might need to go?
So I guess I'd start by saying we've been saying we would move expeditiously to get to the range of neutral, and I think we've done that now. We're at 225 to 2.5, and that's right in the range of what we think is neutral. So the question is, how are we thinking about the path forward? So one thing that hasn't changed is that it won't change is that our focus is going to continue to be on using our tools to bring demand back into better balance with supply in order to bring inflation back down. That'll continue to be our overarching focus. We also said that we expect ongoing rate hikes will be appropriate and that we'll make decisions meeting by meeting. So what are we going to be looking at? We'll be looking at the incoming data, as I mentioned, and that'll start with economic activity. Are we seeing the slowdown in economic activity that we think we need? And there's some evidence that we are at this time. Of course, we'll be looking at labor market conditions, and we'll be asking whether we see the alignment between supply and demand.
Bye-bye
getting
my
better,
puts
getting
on
closer.
SPY. I thought
Of
the
course,
Fed would
we'll be
make the
looking
SPY
closely at
dead, but this
inflation.
market
You
did
mentioned headline
thrive.
and core.
Then big old
Our
banks are
mandate
buying
is
calls
for
on the
headline. Of course,
SPY,
it's not for
singing
core,
this
but
won't
we
be the
look at
day the
core
market
because core
dies.
is
This
actually a
won't be
better
the day the
indicator
market
of headline
dies.
and of all inflation going forward. So we'll be
Does it
we'll
need to be
looking at
today?
both, and we'll be looking at them at those both really for what they're saying about the outlook rather than just simply for what they say. But we'll be asking, do we see inflationary pressures declining? Do we see actual readings of
Pick
inflation
it
coming down?
up.
So in light of all that data, the question we'll be asking is whether the stance of policy we have is sufficiently restrictive to bring inflation back down to our 2% target. And it's also worth noting that these rate hikes have been large and they've come quickly, and it's likely that their full effect has not been felt by the economy. So there's probably some additional tightening, significant additional tightening in the pipeline. So where are we going with this? I think the best I think the committee broadly feels that we need to get policy to at least to a moderately restrictive level. And maybe the best data point for that would be what we wrote down in our SEP at the June meeting. So I think the median for the end of this year, the median would have been between 3.25 and 3.5. And then people wrote down 50 basis points higher than that for 2023. So that's, even though that's now 6 weeks old, I guess, that's the most recent reading. Of course, we'll update that reading at the September meeting in 8 weeks. So that's how we're thinking about it. As I mentioned, as it relates to September, I said that another unusually large increase could be appropriate, but that's not a decision we're
I think
making
right now
now.
we're
It's
just
one that
tracking
we'll
with the
make based
SPY. I
on
think
the
we
data
saw
see.
some imbalance
And we're
play
going to be making
out.
decisions meeting by meeting. We think it's time to just go to a meeting by meeting basis and not provide.
We saw a little volume earlier, but I think we'd be expecting quite a lot
on the
more.
weighted neutral.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said that your policy works through influencing expectations and that policy needs to be at least moderately restrictive, which means you need financial conditions to stay tight. Futures market pricing currently implies you will raise rates this year along the lines of your June SEP, but then lower them a few months later next year. Are these expectations consistent with the need to keep financial conditions tight in order to moderate purchasing power and bring inflation back to 2%?
So I'm going to start by pointing out that it's very hard to say with any confidence in normal times, what the economy is going to be doing in 6 or 12 months. And so to try to predict what the appropriate monetary policy response would be, I mean, of course, we do that in the SEP, but nonetheless, you've got to take any estimates of what rates will be next year with a grain of salt, because there's so much uncertainty. These are not normal times. There's significantly more uncertainty now about the path ahead than I think there ordinarily is, and ordinarily it's quite high. So again, I would, the best data, the only data point I have for you really is the June SEP.
You're averaging
which I
down
think
August SPY puts?
It's just
Yeah,
the
why
most
not?
recent thing that the committee's done. Since then,
I know.
inflation is
I'm just selling
higher.
calls right now.
Economic activity has come in weaker than expected. But at the same time, I would say that's probably the best estimate of where the committee's thinking is still, which is that we would get to a moderately restrictive level by the end of this year, by which I mean somewhere between 3 and 3.5%, and that the committee sees further rate increases in 2023. As I mentioned, we'll update that, of course, at the September meeting, but that's really the best I can do on that.
You said inflation had been a little bit hotter than anticipated. Has your view of the terminal rate changed since June?
So I wouldn't say it was. I think we didn't expect a good reading, but this one was even worse than expected, I would say. I don't talk about my own personal estimate of what the terminal rate would be. I will write down that in. It's going to evolve. It's obviously it has evolved over the course. I think for all participants, it has evolved over the course of the year as we learn how persistent inflation is going to be. And by the time of the September meeting, we will have seen 2 more CPI readings and 2 more labor market readings, and significant amount of
running out of
readings
calls to
about
sell.
Economic activity and perhaps geopolitical developments. Who knows? It'll be a lot. It's an 8-week intermeeting period, so I think we'll see quite a lot of data, and we'll make our decision at that meeting based on that data.
Gina. Hi, Jarrell. Thanks for taking our questions. Gina Smilik, New York Times. You kind of alluded to this earlier, but I wonder, in the event that you see several months of very weak headline inflation numbers because oil prices are coming down so much, but core inflation continues to be strong or even picks up, I wonder how you would think about that.
So it's hard to deal with hypotheticals, but I just would say this: we would look at both, and we'd be asking ourselves, are we
GME calls?
confident
Oh shit!
that inflation is on a path down to 2%? That's really the question, and we'll be making
Nice.
Our policy stance will be set at a level ultimately at which we are confident that inflation is going to be moving down to 2%. So it would depend on a lot of things. Of course, as I mentioned, core inflation is a better predictor of inflation going forward. Headline inflation tends to be volatile. So in ordinary times, you look through volatile moves in commodities. The problem with the current situation is that if you have a sustained period of supply shocks, those can actually start to undermine or to work on de-anchoring inflation expectations. The public doesn't distinguish between core and headline inflation in their thinking. So it's something we have to take into consideration in our policymaking, even though our tools don't really work on some aspects of this, which are the supply side issues.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. Earlier this week, the president said we are not going to be in a recession. So I have two questions off of that. Can you share the president's confidence in not being in a recession? And second, how would or would not a recession change policy? Is it a bright line, sir, where contraction of the economy would be a turning point in policy, or is there some amount of contraction of the economy the committee would be willing to abide in its effort to reduce inflation?
So as I mentioned, we think it's necessary to have growth slow down, and growth is going to be slowing down this year for a couple of reasons. One of which is that you're coming off of the very high growth of the reopening year of 2021. You're also seeing tighter monetary policy, and you should see some slowing. We actually think we need a period of growth below potential in order to create some slack so that the supply side can catch up. We also think that there will be, in all likelihood, some softening in labor market conditions, and those are things that we expect that. And
I have lots of zero
DCE
397s
to get inflation. If we were to be able to get inflation back down on a path to 2%, ultimately get there.
The question was whether you see a recession coming and how that might or might not change policy. Thanks.
So we're going to be focused on getting inflation back down, and we, as I've said on other occasions, price stability is really the bedrock of the economy, and nothing works in the economy without price stability. We can't have a strong labor market without price stability for an extended period of time. We all want to get back to the kind of labor market we had before the pandemic, where differences between racial and gender differences and that kind of thing were at historic minimums, where participation was high, where inflation was low. We want to get back to that. But that's not happening. That's not going to happen without restoring price stability. So that's something we see as something that we simply must do. And we think that we don't see it as a trade-off with the employment mandate. We see it as a way to facilitate the sustained achievement of the employment mandate in the longer term.
Howard Schneider with Reuters. Particularly in regard to expectations, it's been said the last few months that the risks of doing too little outweighed the risks of doing too much. Does that remain the bias?
So we're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down while sustaining a strong labor market. As I mentioned, along with, in all likelihood, some softening in labor market conditions. So that's what we're trying to achieve, and we continue to think that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control.
This is Popcorn Trader. I don't normally ask you for much, but I'm going to need you to drill for oil, baby. I need this.
I do think, as I said just now, that restoring price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have a sustained period of very strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
But as a follow-on to that, given the uncertainty and the sort of paradoxical flow of data you've been getting, if you're going to make a mistake, would you rather make the mistake on doing too much, raising too much, than raising too little?
Yeah, we're trying not to make a mistake. Let me put it this way. We do see that there are two-sided risks. There would be the risk of doing too much and imposing more of a downturn on the economy than was necessary. But the risk of doing too little and leaving the economy with this entrenched inflation, it only raises the cost. If you fail to deal with it in the near term, it only raises the cost of dealing with it later. To the extent people start to see it as just part of their economic lives, they start to factor high inflation into their decisions, when that, on a sustained basis, when that starts to really happen, and we don't think that's happened yet, but when that starts to happen, it just gets that much harder and the pain will be that much greater. So I really do think that it's important that we address this now and get it done.
I think you guys are misunderstanding the Fed policy here. They don't want this
Thanks,
going
Chair Powell.
up.
Neil Irwin from Axios. To build a little bit on what Steve
They
was
want this
asking,
to trade flat.
Do you believe the United States is currently in a recession? Will
They don't want it
GDP
to go down
reading
really
tomorrow
hard.
affect that judgment one way or the other? And
They
has your
definitely
assessment of the
don't want
risk
it to
of
go up.
recession changed any in recent weeks?
So I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing, too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth. I think payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong.
Yeah, Cat's
So this
moving
is
up
a very
really
strong
well.
labor market, and it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So I don't think the U.S. economy is in recession right now. Haven't seen it, and we'll just have to see what it says. I don't. I would say generally the GDP numbers do have a tendency to be revised pretty significantly. It's very hard. It's very hard to accumulate U.S. GDP. It's a large economy, and a lot of work and judgment goes into that. But you tend to take first GDP reports, I think, with a grain of salt. But of course, it's something we'll be looking at.
Hi, Chair Powell. Victoria Guida with Politico. I wanted to ask about the new conflict of interest rules that you all rolled out. Some senators have written asking for those
Thoughts
rules
on
to
gamma
have
imbalance? I
more
don't think
teeth
we're going to
and
see it
have sort
covered
of more
today.
transparency about the Fed officials' financial activity. I was wondering if you could speak to that and whether you intend on toughening
It looked
those
like we
rules
were
in any
starting
way.
to get some volume
So those are
volatility
the toughest
earlier,
rules in
but
place,
then it kind of died off,
at
and
any
now we're just
comparable
like
institution that I'm aware
barely
of.
tracking with
We
the
think,
market.
we thought about this carefully, and we put them in place, and we're building the infrastructure so that the enforcement will be tight. That actually you won't be able to make trades unless they're pre-cleared.
You're selling your SPY puts? No.
And the amount
Selling
of trades
calls
you
I
make
bought
will be,
before the
they'll have to be
meeting.
45 days or more before any FOMC meeting. It's just, I think we've really created a very strong and robust set of rules that will support public trust in the institution. And again, we're just now, the system is just now up
I'm
and
stuck
running.
at the
I'm
exhibitor
proud of
booth
what
at a
we did.
conference, and I have diarrhea. I can't leave and have no Imodium. What do I do? I also have no audio, so please write your
Katerina
response.
Saraiva, Bloomberg News. I wanted to ask a little bit more about the 75 basis points versus 50 versus 25. Can you talk a little bit about what kind of goes into your thinking for making the decision on how much to raise rates, and just talking about a very large amount that you alluded to, could that possibly be 100 basis points? And then kind of along those lines, is there any sort of weakness in the economy outside of inflation measures that would lead you to slow your hiking pace?
So I'm gonna take that as a question about the next meeting and thereafter. So as I mentioned, we're going to be looking at all of those things: activity, labor market, inflation, and we're going to be thinking about our policy stance and where does it really need to be. And I also mentioned that as this process, now that we're at neutral, as the process goes on, at some point, it will be appropriate to slow down.
The
And
Dixie's
we haven't made a
responding to the
decision
increase in the
when that
market.
point is, but intuitively that makes sense, right? We've been front-end loading these very large rate increases, and now we're getting closer to where we need to be. So that's how we're thinking about it. And we're, in terms of September, we're going to watch the data and the evolving outlook very carefully.
So much
and
repositioning.
factor in everything and make a decision in September about what to do. And I'm not really going to provide any specific guidance about what that might be. But I mentioned that we might do another unusually large rate increase, but that's not a decision that we've made at all. So we are, we're going to be guided by the data. And I think you can still think of the destination as broadly in line with the June SEP, because it's only 6 weeks old, and sometimes SEPs can get old really quick. I think in this one I would say is probably the best guide we have as to where the committee thinks it needs to get at the end of the year and then into next year. So I would point you to that.
Hi, thank you.
No,
Chris
I didn't
Regaber,
sell any
Associated
CCs.
Press. I wanted to ask about, right now there's a sort of growing gap between the Fed's preferred measure of inflation, the PCE index, and the one that's followed by the public, the CPI, of course. How do you expect to handle this divergence if the PCE starts to come down enough for you to consider slowing rate hikes, even if the public is still seeing much higher CPI ratings? Thank you.
So it's an interesting situation. Of course, we've long used PCE because we think it's just better at capturing the inflation that people actually face in their lives. And I think that view is pretty widely understood. That said, the public really reads about CPI. And the difference really is because the CPI has higher weights on things like food, gasoline, motor vehicles, and housing than the PCE index does. And so that accounts for a lot of the difference. However, over time, they tend to come together. We were given the importance in the public eye of CPI. We are calling it out and noticing it and everything like that. But remember, we do target PCE. That is because we
You
think it's a
also offer a
better
deal to
measure.
Russia for them to release
They will
Brittany
come together
Griner?
eventually. The typical gap was really
Who?
about 25 basis points for a very long time. And if it got to 40 basis points, that would be very noticeable. Now it's much larger than that because of the things I mentioned. So we'll be watching both, but again, the one that we think is the best measure always has been PCE, at least since I think
fucking forgot I have
20
calls.
plus years ago moved to PCE.
I'd like to weave a couple of things together, Mr. Chairman. Michael McKee from Bloomberg TV and Radio. You said that the destination pretty much remains the same in terms of your end of the year target, but where are you in the journey? We've now seen the federal stimulus programs end. You mentioned consumer spending, business investment have slowed. Are they moving at a pace you would expect, or is demand still greater than supply, too much greater than supply, that you need to do significantly more? And I ask because there are lags in the impact of monetary policy, as you mentioned, and a lot of this might hit in 2023. The strong dollar effect may hit in 2023 when the economy might be weak. How do you know where you are and where you think you need to get to?
Well, just talking about demand for a second, as I mentioned in my remarks, I think you pretty clearly do see a slowing now in demand in the second quarter. Consumer spending, business fixed investment, housing, places like that. I think people widely looked at the first quarter numbers and thought they didn't make sense and might have been misleading in terms of the overall direction of the economy. Not true of the second quarter, but at the same time you have this labor market. So there are plenty of experiences where GDP has been reported as weak and the labor market is strong and the economy has gone right through that and been fine. So that's happened many times. And it used to happen, if you remember, in the first quarter of every year for several years in a row, GDP was negative and the labor market was moving along just fine, and it turned out to just be measurement error. It was called residual seasonality. We don't know the situation. The truth is, though, we think that demand is moderating. We do. How much is it moderating? We're not sure. We're going to have to watch the data carefully. There is a great deal of money on people's balance sheets that they can spend. The unemployment rate is very low. The labor market's very hot. There are many, many job openings. Wages are high. So it's the kind of thing where you think that the economy should actually be doing pretty well in the second half of the year. But we'll have to see. We don't know that because you do see a marked slowing in the second quarter. that is fairly broad. So we'll be watching that. We'll be watching that. Of course, as I mentioned, we do want to see demand running below potential for a sustained period to create slack and give inflation a chance to come down.
Hi, thank you, Chairman. Nicole Goodkind, CNN Business. When does the committee expect to see a meaningful slowdown in the labor market, and how much weakness will it accept with regard to slower job growth and higher unemployment before it pauses or begins to think about cutting rates?
It's public
So
stuff.
I think you're already seeing.
Yeah.
You've seen in the labor market, what you've seen is a decline from very high levels of job creation last year and earlier this year to modestly slower job creation. Still quite robust, as I mentioned. So you're seeing that. You're seeing some increase in initial claims for uninsurance, although that may actually have to do with seasonal adjustments. We're not sure that that's actually real. There's some evidence that wages, if you look at average hourly earnings, they appear to be moderating. Not so yet from the other wage measures, and we'll be getting the Employment Compensation Index measurement, I think, on Friday, I guess. And that's a very important one because it adjusts for composition. So I'd say you and also anecdotally, you hear much, the sort of level of concern.
Assuming center gherk is straddling, is left or right gherk full bear? Listen, man, I'm just long volatility, all right?
And say, for example, late in the latter parts of last year. So there's a feeling that the labor market is moving back into balance. If you look at job openings or quits, you see them moving sideways or perhaps a little bit down. But it's only the beginning of an adjustment. But I think most also, if you look at, I mean, once you start citing these things, you can't stop. If you look at the household survey, you see much lower job creation, and the household survey can be quite volatile, but it has no jobs created in the last 3 months. So that might be a signal that job creation is actually a little bit slower than we're seeing in the establishment survey. So, executive summary, I would say there's some evidence that labor demand may be slowing a bit. Labor supply,
we don't
not
have
so much.
burritos.
We have been disappointed that labor force participation really hasn't moved up since January. That may be related to yet another big wave of COVID, and there's evidence that that's the case. But so we're not seeing much in the way of labor supply.
Cheap out getting his data from Ortex.
Some progress on
he might
demand
be.
and supply getting back in alignment. So I think we're looking.
Wages are high, but that's bad, right? Because it creates more demand.
As well, we you know, as I mentioned, we need to see inflation coming down. We need to be confident that inflation is going to get back down to mandate consistent levels. That's not something we can.
Your wages might
really
not be high, but you know, it's really not a fair assessment.
That the labor market can adjust because of the huge overhang of job openings, of excess demand. Really, there should be able to be an adjustment that would have perhaps lower than expected increases in unemployment, lower than would be expected in the ordinary course of events, because the ratio of vacancies to unemployed is just out of keeping with historical experience, and that suggests that this time could be different.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So you said the path may be narrowed to avoiding a recession. So how close are we to a recession? And then how do forecasts of possible recessions from banks and economists, how does that make a soft landing you've talked about more difficult?
So as I mentioned,
minus 4% when adjusted for inflation, but they're high, Dork. And the Fed needs people unemployed. Not working.
Some slowdown, let's
stop,
put it that way.
Everyone needs to stop working and buying shit so they can fix the economy, okay?
That I mentioned, but there's also just the very strong.
If everyone would just stop buying anything for like one fiscal quarter,
overall, you would say that
nothing. Like, don't purchase anything. Everybody quit your jobs.
Strong.
And then the Fed can fix it.
Still on track to continue to grow this year, but the slowdown in the second quarter is notable, and we're going to be watching that carefully. Sorry, what was a lot?
Forecasts. How do bank forecasts of possible recessions, economies? Does that affect the soft landing?
The world's fastest, shortest recession incoming.
We've said since the beginning, I think, that.
Think about
that
August
having a soft
19,
landing is what
325,
we're aiming for. Of course,
324,
that
and
has to be our goal.
323
It is our
puts are
goal.
good. I think I'm
And
just gonna
we'll keep
wait.
trying to achieve
Thoughts?
it.
I think you're
I do think
$75 out of
events,
the money, and your
uh,
target is
At the
absurd.
beginning, we said it was not going to be easy. It was going to be quite challenging to do that. It's unusual. It's an unusual event. It's not a typical event, given where we are. If there is a path to it, and we think there is, it is the one I mentioned, that the labor market actually has such a large amount of surplus demand that you could see that demand coming down in a way that didn't translate into a big increase in unemployment, as you would expect in the ordinary course, because frankly, the imbalance is so much greater. But we don't know that. I mean, this is a case of first impression. So anyone who is really sure that it's impossible or really sure that it will happen is probably underestimating the level of uncertainty. And so I would certainly say it's an uncertain thing. Nonetheless, it's our goal
I have
to achieve
puts.
it, and
I've been
we'll
buying
keep trying
more.
to do that.
Thank you, Mr. Chairman. Jean Young with Market News. I wanted to ask about the balance sheet reduction program. It's been working for a couple months now.
You're
and
holding
in a
your puts
different
overnight?
environment than the
Yeah,
last
they're
time
for
the Fed
August.
did it. What are you learning about how it's working and how markets are reacting? And is reaching the minimum level of reserves needed in the system still several years away at the current pace?
So we think it's working fine. As you know, we tapered up into it, and in September we'll go to a full strength, and the markets seem to have accepted it. By all assessments, the markets should be able to absorb this, and we expect that'll be the case. So I would say the
Tesla
plan
puts,
is
what do you think?
broadly on
I
track.
have them.
It's a little bit slow to get going because some of these trades don't settle until for a bit of time.
VXX,
It'll be picking up
VIX,
steam.
and UVXY rising with the SPY.
And I guess
What
your
mean?
second question was
Volatility is increasing?
Was getting the process of getting back down to the new equilibrium will take a while, and that time it's hard to be precise, but the model would suggest that it could be between 2.5 years, that kind of thing. And this is a much faster pace than the last time. Balance sheet's much bigger than it was, but we looked at this carefully, and we thought that this was a sensible pace, and we have no reason to think
Is
it's
theta
not.
really time or more like insurance? Both.
Hi, Chairman Powell. Brian Chung, Yahoo Finance. Looking at financial conditions, it seems like the tightening has slowed as of late, with the 10-year coming down, 30-year fixed mortgage rates also going a bit sideways when we
It's
talk about a
trying to get
hot
out
housing
breaking
market
even
still.
on ours
Just
before
wondering
it
if you
shits the
find
bed
financial
and tank.
conditions tight enough, especially as you continue to raise rates.
I mean, I don't think anyone's
So a
exiting
big piece
puts
of that
right
is
now. I mean,
inflation
some people might be,
expectations,
but
break-evens coming down.
I don't think
which,
any like
is a
institutions
good
are
thing. It's a
exiting
good
put
thing that
positions right
markets
now.
do seem to have confidence in the committee's commitment to getting inflation back down to 2%. So we like to see market-based, readings of inflation expectations come down. Broader financial conditions have tightened a good bit. I mean, the way this works is we set our policy, and financial conditions react, and then financial conditions are what affects the economy. So, and we don't control that second step. We're just going to do what we think needs to be done. We're going to get our policy rate to a level where we're confident that inflation will be moving back down to 2%. Confident. So that's how we're going to take it. And of course, we'll be watching financial conditions to see that they are appropriately
What do you
tight.
think of my
and that they're
August
having the
35 to
effect
45
that we would
calls
hope they're
about this
having,
morning?
which is to see demand moderate
Strange
and
choice.
inflationary pressures recede and ultimately inflation come down.
Didn't we drop like 10 points overnight the last time this pump happened?
Thank you, Chair Powell. Greg Ross
Not
from Market
10
Watch.
points. We dropped
I wonder if
like,
you can
I
go
think we
back a little
opened
bit in
like
time to
250 BPS
before
down,
there was
roughly.
this outbreak of inflation, when the committee put in place forward guidance on tapering asset purchases. I think it was December 2020. There's a recent speech by Fed Governor Waller talking about that and saying that maybe that was too tight, that kind of condition, and it put you a little bit behind. Not his words, but maybe,
Microsoft
we're kind
up
of
on
late to
garbage.
react
Google
to some of that
too.
inflation. So could you talk about that decision, and have you looked at it in hindsight at all? Thank you.
So, yeah, we said that we wouldn't lift off until we had basically achieved our dual mandate goals. And the reason we did it in real time was that the first look at the new framework that we'd rolled out.
About 394, 390.
Plenty of people were saying, "Oh, it's not
395,
credible. You'll never get
394,
inflation to 2%."
393.
Some of our critics,
Let's look at
who-
other
who say
plays. I
inflation's
picked up
too
some
high were the same ones
398s.
who were saying you'll never get to 2%. Well,
If
but
it
anyway,
breaks
that's what happened.
401
So we
and
we
holds
thought
it
we
for a
needed to
second,
really
I might try to get some
make a strong
400s.
statement with that. It wasn't part of the framework. The December 20 guidance was not part of our overall new framework. It was just guidance that we put in place. So I would say two things. One, I don't think that
Why is
is
everyone, like, if you have
materially
August
changed the
puts, why the
situation.
fuck do you
But
care?
I have to admit, I don't think I would do that again. I don't think I would do that again. We, ultimately the situation evolved in a highly unexpected way for all of us. And, maybe the learning is that leave a little more flexibility than that. But did it matter in the end? If you look at, I really don't think it did. I'm not sure it would have mattered if we'd been raising rates 3 months earlier. Does anybody think that would have made a big difference?
No one likes to
lots
see
of central
red.
banks were raising
Oh.
rates 3 months earlier.
You're in the wrong
and
fucking
it
game
didn't
then.
matter. I mean, this is a global phenomenon that's happening now. Admittedly different in the United States.
Some of us have puts for Friday. Well, that's silly.
Anyway.
You should have sold those
Just
yesterday.
A lot of people talk about that time, and they talk about a taper tantrum. That
Why would
I know
you hold
haven't talked about
weeklies
it too much, but that
through
you were worried
profits?
at the time about repeating that taper tantrum that you had experienced as a governor. So was that part of that? Where did that fit into all this? Thank you.
So I think we learned there have been multiple taper tantrums, right? So there was the famous
How about
one in
them today?
2013.
Did
There's
you
what
buy?
happened at
Did
the
you buy
December
calls
18
too?
meeting where,
Or did you just straddle the
markets can
downside?
ignore
I mean, the news
developments
is still
around the balance sheet
bearish.
for years on end, and then suddenly
The
react
the
very
second
sharply.
iteration
So
of the
we just had
highest rate
developed a
hike the Fed
practice
has done
of
in
moving
fucking 30
predictably
years
and doing it in
is
steps
not
and things
bullish
like that. It was
news.
just like that's how we did it. And so we did it that way this time.
Just
We
because
were careful
institutions want to
to
move their fucking
take
hedges
steps and
doesn't mean that we're going to
communicate
like
and all that
stay
kind
at
of thing.
these
We were
prices
trying to
or that
avoid
this is
a tantrum
sustainable in
because
any
they can be
way.
quite destructive. They can tighten financial conditions and knock the economy off kilter. And when it happens, you have to really in both 13 and 18 really had consequences for the real economy. 2, 3, 4 months later. So we were trying to avoid that. That was part of it. Again, I don't
Nothing
think
bullish has happened
the
at
real
all.
issue of 2020.
Google earnings were shit.
21 was just
Microsoft
trying to
earnings were
understand what
shit.
was
And
happening
now we get
for
more
the
tech
European
earnings
economy.
tonight.
That was
and if,
where the big
and
uncertainty was.
tomorrow. And if fucking
our
Apple
view
and
was
Meta
that-
shit the
that
bed,
the supply side issues
the
would get
fucking
better, that people would go
Nasdaq's
back
going to
to
gap
work, that
right the
labor
fuck
force
back
participation
down.
would come back. Everyone would get vaccinated. Schools would open. Kids would be in school, and labor force participation would jump back up. That's what that was very broadly thought to be the case. These supply side issues would get solved reasonably quickly, and they just haven't. They still haven't. So that's really the learning, I think, is around how complicated these supply side issues can be. We haven't seen this before in a long, long time, and so that's really what accounts for the pace at which we moved. And we did when inflation changed direction, really.
Dear God,
in
Jay
October,
Fresh.
We've moved quickly. Since
I'm not
then.
putting that on this
People were great.
stream.
But before then, inflation was coming down month by month, and we kind of thought we had the story, probably had the story right. But then I think in October you started to see a range of data that said no, this is a much stronger economy and much higher inflation than we've been thinking. And again, we pivoted, and here we are.
Nancy Marshall-Genser with
How far
Market
out
House.
are your August
Chip, I
spy
just
puts?
wanna
August
pin you down
19.
a little bit more on the issue of recession. So if we get a negative GDP number tomorrow for the second quarter, would the Fed consider the U.S. in a recession? And just remind us, what is your definition for the start of a recession?
So the Fed doesn't make a judgment on that. We're focused on the dual mandate and using our tools to achieve maximum employment and price stability. We don't.
Do you dip his
we don't
balls in
say
paint
there's no
again?
recession,
I mean, he
that kind of
dips
thing.
the
So
whole
that wouldn't be something
the
we
whole
do.
unit
We would
in
look
in
at
paint.
the
It's
data
like
tomorrow,
shaft on balls.
and no doubt we'll look at it very carefully and draw whatever implications we can. As I mentioned, though, if you think about what an inflation,
Imagine not doubling down on spy puts at these
prices. Decline
prices.
across many industries.
It's like if Jimmy was
that,
$20 again. Yeah.
That's sustained for more than a couple of months, and there are a bunch of specific tests in it. And
I only
it
have
just
2
this
calls
doesn't
left
seem
to
like
sell,
that
though.
Now, what we have right now doesn't seem like that, and the real reason is that the labor market is just sending such a strong a signal of economic strength. that it makes you really question the GDP data. But again, that's not a decision that we make, and we won't reach a conclusion one way or another.
Theta is just crunching them. Jesus Christ.
Thank you very much. Simon Rabinovich with The Economist. You've said that some softening in the labor market is needed. Within the Fed, there are staff economists who've argued that NIRU, the non-inflationary rate of unemployment, might be as high as 5 to 6% right now, which obviously is a lot higher than the current rate of 3.6. What's your assessment of NIRU? Is that something that came up in discussion with the committee?
So I think broadly, a lot of economists think that the natural rate of unemployment will have moved up to some significant extent above where we think it was before. And the reason is it's the usual matching issue where matching has become less effective. And
Stay out of the SPY because it hates
kind
me.
of turbulent downturn and the big switches in demand from services to goods and all that.
Fair.
So it could be higher, and my own instinct is that the natural rate of unemployment is higher.
You still have zero
Of course,
DTE
I would
puts?
add that we
No.
don't know it. We can never know where these.
I had
star
zero
rails
DTE calls.
are
I
in
didn't have
real
any zero
time
DTE puts
with any confidence, but I would say it must have moved up materially. But the
I
other
just
side
bought
of that
calls
is
to hedge
as
the put position,
as all these jobs get
before
created,
the
and people go back to
FOMC.
work, and unemployment is so low. I think you could, in principle, you could see it coming back down pretty significantly. And that would also, by the way, take pressure off of inflation.
Put the
Because
JFresh
that
picture on
gap, it's the
screen.
gap
I will
between
not, Carl.
Actual unemployment and the natural rate that really is relevant for, the negative slack we have in the economy by the overtight labor market. So if you were to, you wouldn't observe this. It's an unobservable.
Tell me I did
but
good, and
you
it'll
could
all
actually
be
seeing
okay.
inflationary pressures coming down if that
Doesn't
does
sound
happen.
too
And
bad.
we don't
What's
control that, but
QQQ
that's
at?
something
I know that ripped hard
logically,
today.
If the pandemic and the disorder in the labor market cause the natural rate to
Rough.
move up, then as the labor market settles down, in principle, you should see it move back down.
What date are your QQQ calls for? 8:10? You might be okay.
Thank you, Chair Powell. Jeff Cox from CNBC.com. Just a question about, hate to keep banging the drum about recession, but most of the polls that we're seeing now from the public, people believe that we're already in a recession or heading for one. Economists pretty much the same thing. They're being told by folks like you and in the administration that we're not in a recession, we're not heading for a recession. Frankly, coming from the same people who told them that inflation was transitory, telling them now that we're not heading for a recession. So what would you tell the public to reassure them now that you feel confident in your forecast going forward and the Fed is ready to respond to a potential downturn in the economy?
No, all I've really said is I don't think it's likely that the U.S. economy is in a recession now, and I've explained why that is the case. It's because you do see a very strong labor market, and I think the public will see that as well. Going forward, what we've seen is a slowing in spending, as I mentioned. We've seen the very beginnings of perhaps a slight lessening in the tightness of the labor market, but it would only be the beginnings. So, and I mentioned that I also said that our goal is to bring inflation down and have a so-called soft landing, by which I mean a landing that doesn't require a significant increase, a really significant increase in unemployment. We're trying to achieve that. I've said on many occasions that we understand that's going to be quite challenging and that it's gotten more challenging over recent months.
Thanks,
He
Chair
just said
Powell.
the labor market
Kyle
was
Campbell with American
robust,
Banker.
and then said the labor market was
The FOMC has historically tried
was
to avoid
unclenching.
the kind of rapid monetary policy tightening that has
This
happened
guy's
so far
fucking
this
hair
year.
is bussin'.
How concerned are you that the rate hikes that we've seen thus far might increase risks to financial stability, not just domestically but globally?
I mean, there are precedents for the FOMC moving very quickly. For example, 1994, 1980, even more so. So we've been known to do that when it's the appropriate thing to do, and this year it clearly is. I would say that given how quickly we've moved, I'm gratified that that basically markets have been working, they've been orderly. There's been some volatility, but that's only to be expected. From a financial stability perspective, You know, asset values are down, which in some sense lowers vulnerabilities. It's when they're really high that you would worry that they're vulnerable to a fall. Actually, many asset values have come down. I think you've got a well-capitalized banking system. I think you have households are generally in about as strong financial shape
run
as
continues
they've been
tomorrow or market
in a
reversal?
very long
We'll
time,
see what
or
happens
perhaps ever,
overnight.
given what the money that's on people's balance sheets and so you have a pretty, from a financial stability standpoint, you have a pretty decent
Even great
picture.
fills on my puts. This makes me nervous.
Macroeconomic,
buying
there are plenty
puts
of
on the
macroeconomic
SPY?
issues that don't rise to the level of
Why wouldn't you
financial
get good
stability
fills?
concerns.
It's
By
super
financial
liquid.
stability, you know, we think of that as things that might undermine the working of the financial system. So big, serious things. That's not to say that people at the lower end of the income spectrum
I've
aren't
sold all
aren't
my zero
suffering,
DTA
because they
calls
are. They're
off
suffering
now.
from
I have
high
nothing left
inflation.
to do.
They're going to the
Turd,
you
your
know, to the grocery
Coca-Cola
store
play isn't
and
working out.
finding that
But
you know,
I
in
accidentally
many
only bought
cases
one
their
contract, so you still have a
paycheck doesn't
$90
cover the
balance
food
in your
they're accustomed
account.
to buying. We're seeing actual, you know, real declines in food consumption, and you know, it's very concerning. It's very unfortunate, and that's why we're really committed to bringing down inflation. One of the reasons.
Go to Mark for the last question.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. I can remember when you held your first news conference and you vowed to be a very plain-spoken chairman, and we're thinking today about the impacts of Fed policy on individuals as well. What would you say to individuals or households who may yet lose their jobs in this tightening cycle in the fight against inflation as they try to translate what Fed policy means to them in this complicated economic landscape?
Yeah.
Thank you.
So I guess the first thing I would say to every household is that we know that inflation is too high. We understand how painful it is, particularly for people who are living paycheck to paycheck and spend most of that paycheck on necessities such as food and gas and heating their homes and clothing and things like that. We do understand that those people suffer the most. Middle class and better off people have some resources where they can absorb these things, but many people don't have those resources. So, you know, it is our job, it is our institutional role. We are assigned uniquely and unconditionally the obligation of providing price stability to the American people, and we're going to use our tools to do that. As I mentioned, there will be in all likelihood, some softening in labor market conditions. We need growth to slow to below potential growth. We don't want to, you know, we don't want this to be bigger than it needs to be, but ultimately, if you think about the medium and longer term,
Is everyone able
price
to heat
stability
their
is the thing
homes
that makes the whole economy work? It's what can give us a strong labor
during
market
during
and
this
wages that aren't getting
extraordinarily
eaten
hot
up
summer?
by
I
high
hope so.
inflation. If you talk to people, again, people who are making, you know, wages, relatively low wages, they're the ones who are suffering the most from inflation. So it's all the more reason why we need to move on this. Thank you very much.
Just open the window. What an exciting speech from Chair Powell. Oh wow, there's still way too many of me on the camera. Hold on. Where's the real me? There it is. Now that he's done, we're going down. We'll see. It'll probably be overnight or the next couple days. Options flows picked up massively, so we'll see how it shakes out. SPX is just nothing but puts. Big numbers of calls bought around like 2:43 to 3 o'clock, and now puts and calls are evening out. Looks like lots of 39.85 puts. No calls really above 4,100. 4,100 seems to be like the target range here. I'm not seeing, there's a little bit of open interest at 4,300, but very little. Most of the call volume looks like it's targeting this range right here. 41, not 4105, a little bit. But put volume starting to come in at 39.85 and 39.80 and 39.95. What strikes your SPY puts for 819 at? I have 398, 395, 390, and 385. When was the last time QQQ was up almost 500 BPS on the day? Has to be like early 2021. No, it had another big rally since then. Hold on. I think not even that long ago. On like July 18th, it moved up from 289 and peaked at 300. It's almost a $10 move to the upside. This is smaller than that. Also, June 24th, it went from 286 to almost tapped 300, 297.85. There's a $14 move. Jimmy just hit $34 already. No. I feel like I'm taking crazy pills. I don't buy it. AMD doing a thing? Cool. Big things? Top of 90. Ooh. Do I have leaps? No, I sold those last time. Right? Yeah, okay. Visa coming back a little. Cat having a nice run. Yeah, the Dow's pushing up hard into close. And this is just fucking crazy. 300 BPS upside. My shadow band? Look at DMs. 4:30 work? I'll ask him. I don't think 4:30 today would work. He mentioned an errand I need to run after the stream, but maybe another day might. Okay. Yeah, we could I can probably do 5:30, Daniel. Is Atomic gonna be around? I feel like he should be there. Liquidity goes squart. Ooh, Jesus. Okay. Maybe you guys have more that you want to say than me. Watch Spy push 410 overnight. I'm jumping out of a basement window. Did we play Full Bull? No. We did play the Pickle song earlier, though. How high can the market go? Yet daily volume is above average. Well, if shorts are repositioning, then they're not actively pushing down on the price action, right? Like, they're not going to short when they're trying to reposition their shorts. Seems like Cat is inching up to the next level. Buying more calls for Cat? No. Close GME call or hold overnight? I closed them. They were up. So I'll reopen them tomorrow if it looks bullish again. I don't know when they have to clear the hedge by because I don't know when the hedge was created. I haven't gotten a chance to talk to Yelia yet. I just know that she said there was like a hedging imbalance. Just, I mean, kind of good. I had like $34 calls sold, so I was able to pull those back. I bought my SPY August 1 410C for like $27 earlier today. Nice. I don't even know what the SPY futures ticker is on Fidelity. The E-minis? I have no idea. Why do they reposition? To have more pressure to the downside. It's better to short the top, right? Do you think those 395Ps can 2x? What's your target for them? Like 380? How do you get the beans above the franc? I don't know. Layer the franc on the bottom of the bowl. It's hard to be short. Being a bear isn't easy, but you'll get used to it. Aren't we averaging like 2 mil a day pre-split? Yeah, our volume's way down. I mean, the average volume's right here. So our average volume over the last 3 months was 14.09 million a day. We're trading 3.68 today. So like 20% of our average volume. Can bad meta earnings still tank the market, or is the market cap too insignificant now? It can still hurt, yeah. I'll have 5K settled tomorrow for my AMC puts. Spy hold 400 overnight, you think? I'd love to get a better put entry. It might not. Is the recession priced in? No. No one has that data yet, right? Even the Fed doesn't have it yet. Ugh. What are your expectations on GDP tomorrow? Greater than -1, I think. I think, personally. It's yeah, it took the previous volume and multiplied it by 4. What the hell? Why is the SPY pumping on hypothecated bullshit? I don't know. It looks like it's maybe done. Getting there. So all J-Pow said was nothing to worry about. I don't even know if he was that bullish. August 19, 395, average price 702, looking good. First time I've played FOMC. Not bad. What puts Inspire so red now? Drop me below the 25K minimum on Fidelity. Will they maybe deposit more money if I close the day under 25K mark? Do you know? No, not unless you have like a PDT sale or something. I don't know if I really made money today, but I didn't lose a lot. The Tesla calls and the SPY calls helped. I don't know what the average is over it. That was up about 30% on the SPY calls, so those weren't terrible. Tesla calls went up pretty good, but I didn't have very many of them. If you're using margin of Fidelity, you drop under 25K, you're limited to only cash. Oh, okay. Yeah, I guess it'll depend if you've margined your positions or not. Ace of Spades. Tomorrow GDP comes out at negative 1.9%. SPY hits 420. I'm tempted to sell GME covered calls. Are you in? No. I really don't want to sell them unless it breaks above 35. Is Amazon ever going to start climbing? I don't know. They have earnings tomorrow. Where are we on the 2008 chart? It's just a bear rally. What do you think? We're just in a bull market all of a sudden? You guys gotta stop listening to Kramer. What are the chances my GME-CCs get exercised at 34? Well, given that the stock's trading at 33.94, pretty slim. What if GDP isn't negative tomorrow? Up. Does this make your friend having a higher probability of paying you back now? I have no idea. Did you say 8-1 GME-CCs were getting $6? I'm showing 150. No, it was 600 shares, not $6. So six calls, not $6 a call. Have you done any actual real work such that you think GDP would go up? You mean down? Every point of economic data for the last quarter and a half has missed. And missed continuously by broader margins. What would make you think that the GDP would be up? What time do we see GDP data tomorrow? I think it's at 10. Double check. No, 8:30. 8:30 a.m. before the market opens. I'm really confused by what you mean by up. You know it's a negative, right? Why the Fed estimate GDP at negative 1.x while big banks forecasted at plus 1%? Their interests are not aligned. Not a good time for GME-CCs. Are you waiting for the Yaya pump on Friday? Well, it could be tomorrow, too. What would you say is the best broker platform to use to do options trading? Probably IBKR. Riven shedding 6% of workforce. Amazon earnings are going to be a kiss of death for the market. Yeah, they might not be very good. Gerg, I want to say thank you for all you do. I was able to double a DTE SPY 406C today. My report grew from $3.68 to $5.28, and I would have been able to do it without you. Thank you so much. $100K volume bar on GME 2 bars ago. That's a decent chunk. Yeah, it's the second day in a row we've seen that. Not at the same time, about 30 minutes apart, but it's interesting. Nobody's adding any value to the economy, just watching videos on YouTube all day. Good. Does Jimmy 15-minute look like a double bottom? Not really. Like here? I guess. I don't really know if 33.29 is probably in range for it to be like a triple bottom. It's bullish, but it can just get rejected off 35. That's kind of bullish. Well, we'll see. Well, that gap on the SPX is filled now. You should receive the premium either immediately or by the next day. I don't know. If you have like GFEs or something, you might not get it right away. It might be like the next day. See a link on Discord about the GDP. The Atlanta Fed's GDP estimate was like negative 1.2. Right? Yeah. No. Negative GDP is fucking bad. There is no good negative GDP. QQQ up 5% in a day. Yeah, it's crazy. Thanks for all the knowledge. Learning a ton. Thank you so much, Chewy Baka. I appreciate it. August 395 APY puts average at 6.7. Couldn't help average down. Thoughts on that cost basis? It's pretty good. I don't know what Tide is, but somehow my cost basis on it's $15 a share. Dude, don't do what I do and buy shit and forget you own it. Believe me, sometimes you end up with an entire account full of fucking Palantir. What if we mint the GDP and sell it to you as an NFT? Buyer seller exhaustion seem like ending of very large block orders being executed. Yeah, this doesn't look good at least for the long side now. Let me look at the forward contracts. How are those trading? Coming down? No, still kind of elevated. 1 minute. They seem to be peaking. Strong VIX, irrelevant interval. VIX coming down 23.35. God, GME looks good. I like that setup. GME 35, 36 even? That'd be crazy. If we drop below 400, 100% big guys repositioned into puts. What do you think they were doing? I think the yo-yo pump will move back to 40? Maybe 35 or 36. I don't know if we'd move back to 40. That'd be fucking crazy. If we move back to 40, I'm going to sell $35 covered calls. Loving that I woke up and chose theta. I love theta. Think of, you know, someone asked me earlier, is theta same like insurance? Think of it this way. Theta is ensuring that you have enough time to capture the irrationality of the market. So say if there's multiple potential outcomes, right? In a period of time, it gives you time to realize those potential outcomes. What do you think about SQQQ calls for August 19th? They're starting to look a little spicier, but I really don't like playing the SQQQ. Although after this kind of jump, it might be worth it. I might consider buying them further out, and I would probably get them after big tech earnings, which could be too late. You look at the same thing I was just looking at, Torque? Oh, XLF? Huh. Interesting. I pick some very weird stocks to look at sometimes. Overall domestic market liquidity. That makes sense. But how does the financial sector not improve on raising rates? Interesting. Fuck, man. This really just looks like froth. I wouldn't go long on this shit with popcorn traders money. Hedge funds after 0.75 rate hike. Recession is absolutely over, and we've now YOLO'd into calls. We promise. Yeah, it doesn't look like that. Not today, bud. I'm sorry, Popcorn. Spy. Fuck. Here, guys. Just in case you were really worried about how they're positioning. This is for the SPY today. The only time it hit positive delta was during that spike. Tough to see. Can you translate it? Massive negative delta. Huge numbers of September and August puts being bought. Large numbers of August calls being sold off. Doesn't matter if Delta's not driving price action. Oh, but it will. Right? It's just, I'm just pointing out that it's like repositioning, right? Like running up on massive negative delta is just repositioning. SDM. Zoomed out so you can see the significance. Jesus. It's just a lack of buyers in the market. Ding ding. Day is done. SPY finishing out the day at 483. $400, $400, like fuck it, 40104. It's moving around too fast. So big rally after the FOMC meeting here, but remember that, you know, this is largely the recapturing of positions at 400, right? And not just on the SPY, but on the SPX. Most of the institutional positioning was at 4,000, with a gap at 4017. So this gap is now filled. These positions are being rolled still. It's not over, but they are rolling these positions, moving them out, selling off the long side of these. Just wondering if the SPY does come back to... Sorry, 1 second. I'll check that. If I just come back to reality, do you need someone to run errands, perform basic tasks for you for minimum wage? I'll let you know, sweet and sour. Thank you so much. So, you know, with these repositioned going into the end of the week, we can start to see more downside. The Fed rate 0.75 with a 0.75 increase going forward is a raise in expectations from the 0.5 in September that we were expecting. They have said that they are going to continue with this aggressiveness until, you know, possibly the latter half of the year, targeting like 3.5% by next year, which is, you know, at our current rate of 2.25, a 1.25 increase. So at least 2 more 75 basis point hikes. And then if inflation comes in, you know, like CPI comes in shitty again, you know, they're probably going to adjust that up to 100, and that's going to really hurt. GDP data is tomorrow morning at 8:30 a.m. Atlanta Fed came out with a projection today of 1.2, negative 1.2%. I think we might see higher than the previous quarter's inflation, which was negative 1.6%. I think almost every point of macroeconomic data has come in at a miss, and many of them at a very wide miss. So I wouldn't be surprised if we see negative like 1.8, and a worsening of this condition rather than an improvement. We still have a lot of big tech earnings. Meta tonight, Amazon and Apple tomorrow. You know, these are all kind of low priced right now, and this frothiness could lead to runs on all three of these if, you know, they don't miss expectations by as much as the market had priced in, which is kind of what you saw with Google and Microsoft. Yesterday. But you know, regardless, all of these guys are going to be, you know, lowering projections. Amazon probably will be hurt the most by the current economic condition because of their exposure to the supply chain. Apple probably the second most. These three companies, you know, really aren't making money off of physical products, and are less affected by the supply chain. So the fact that, you know, Google and Microsoft lowered expectations is very bearish going into the future. And then for GameStop, I'm still waiting to see some of this covering for the gamma imbalance. The rise in price might help offset some of it, but I don't think we saw anywhere near sufficient volume today to consider any imbalance covered, especially not if it's, you know, a few million shares. I would be careful selling covered calls into the end of this week still because of that. And then, you know, also a little careful next week with ETF FTDs coming into the latter half of the week. With this choppiness in the market, especially, you know, you may not be able to hold all your covered calls till expiration. You may have to pull them back and sell them again when it's, you know, a little less risky, especially if you want to avoid assignment. If you don't care about that, it's not really as relevant. But GameStop's still trading, you know, 25% of the volume that it was previously trading before the split. This is good. I mean, it means they can turn over less FTDs through CNS, low volume periods, and lowering IV periods are very bullish for GameStop in the long term. Hopefully we continue to see put interest come in the money in that attempt to short us down. GameStop on the 1 hour, if we go out here, 1 second, shrink this. GameStop out here on the 1 hour actually looks very bullish. You know, we've hit the bottom of this ascending trend. Took us a couple tests, but we bounced off of it. You know, from a technical perspective, this would mean probably a move back to like 35, possibly a high of 36 on decent volatility. So I think, you know, the technical analysis kind of shows that we can definitely move up a little bit here. Meta earnings probably released. Looks like they're taking a little bit of a hit right now. 1 hour. Go down to the 1 minute. So tested 159 from a closing high of 169, but $10 drop. Yeah, it's getting hit hard. This will hurt QQQ into the morning. It's already hurting it right now. If we look here into the futures, we're already seeing a drop. So yeah, I mean, I don't expect any of this to be particularly bullish, right? Fuck meta. Yeah, I agree. It's a pretty big hit. It's like Zuck might have something in his eye again. He'll be fine. All right. Anyway, I think that about covers it for today. Thank you guys so much for tuning in. I will see you all bright and early tomorrow. And for those of you guys that are holding kind of, you know, if you're holding further dated puts on the SPY, relax. You know, sometimes you got to deal with these. When you play the downside in a bear market, you have to face the reality of oversold rallies. And we oversold hard the other day. If you got out yesterday, you know, that was a good opportunity to exit and take moderate profits. If you hung in there and you still have plenty of theta, I think things will be fine. Don't panic, you know, and I see some of you doing that already. It's very unprofessional. Is August 1 further dated? Is no, but it's not as bad as holding like 729s. GME, was GME coming down hard or doing something fun? Yeah, I don't think that's like a big deal. We slipped 40 cents. All right, guys. Anyway, yeah, don't stress out. If you can and you have the opportunity to average down, you know, these high prices were a good chance to do that. Yeah, I saw Meta already. What do you call it when you insult someone while comforting them? I'm not sure. All right, guys. Thank you so much and have a wonderful night. I'll see you tomorrow.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
have what?
Look, Dad, it's not.
Where did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult.
Sit, Crean, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show!
Not an advisor. Friguland.